mean for European advertisers? We'll watch Publicis, we'll watch WPP as a result of that talk, at least, of consolidation within the sector. Also, watch out for Banco BPM. Crédit Agricole is asking to increase its stake in Crédit Agricole, and in the meantime, it's increased it through derivatives. So we'll watch how that one trades, given UniCredit's intentions towards BPM, Guy.
Let's talk about the open this morning. How China influenced is it going to be, Anna? Here we go. Time for the opening trade. Let's show you some numbers and get an idea of what is going on here. Remember, Friday, CAC outperforms significantly. We start to see maybe a little bit more of a discerning market looking at individual names. This morning, we're out of the gates. We're up by 0.2% on the FTSE 100. Is there a China trade there into the mining stocks? Is this going to be an investment-led story? Is it going to be pulling in extra resources? That could be a boost for the FTSE 100, which now starts to maybe outperform the stock 600. We're up by 0.4% on the FTSE 100, but the CAC blasts through. We're up by 0.8% on that market as well. It outperforms the IBEX. Remember, some of the peripheral markets have done better recently. Do we start to see the CAC coming back? The FTSE 100's been a bit of an underperformer as well. You could argue it is up by 0.4%. So we are seeing some gains here. How do we kind of discern what is China-related, what is momentum out of last week related is going to be, I think, interesting this morning. There are some single stocks that we're going to be watching as well. Kriti, what's going on below the surface?
Well, the luxury story is indeed leading, Guy, and that to me does feel like a China story because remember, from the political front, we are still waiting for Michel Barnier's replacement, basically, to be named, or maybe him himself, if he does remember that caretaker. That's not necessarily a reason to buy French equities. The China story, absolutely maybe. So you are seeing your biggest index contributor to the upside being LVMH here, actually driving the entire stock 600 higher. Kering is up there as well. I'm seeing L'Oreal as one of the big upside movers as well. But Anna, to the downside, it kind of feels like Germany is underperforming a little bit of that tech theme that maybe was going to drive the rally, not so much this morning.
Yeah, and if you're looking for evidence of China's influence, then maybe we see it in the best performing sector, which is basic resources. Iron ore up by 1.4%, and that has picked up after we got those headlines coming through from China. So we see Anglo-American up by more than 2.4%. We see Antofagasta is higher, Glencore, a whole host of mining businesses doing pretty well, and often that can be, of course, a China-related theme. But it is consumer products and services, as you say, Kriti, the luxury space that's also leading us a little higher. Richemont up by 3.4% now. Kering, Burberry, Moncler. It does raise this interesting question, though, as to whether, is this just cyclical in China, waiting for this fiscal stimulus to come through? Is that enough? Is that going to be enough to set the ground, set the foundations for another pickup in luxury spending, which benefits French businesses or not? Has something structurally changed?
Well, this is what we were discussing a little bit earlier on in the show. The old playbook is China stimulates, consumer gets a better feeling, goes out, goes shopping, buys French luxury, buys European luxury. Is that still the correct playbook? It's interesting. We were talking about this earlier on offline. Has the Chinese desire to buy European luxury changed as a result of the political dynamic in China? And are we dealing with the old playbook when we see a reaction like this?
Perhaps. Hasn't shown up in the numbers yet, in the bottom lines of the LVMH, et cetera, where they're perhaps shifting, in theory, away from China and maybe more towards America, if we're looking at that kind of mass consumption story as well, but potentially to their detriment. That's not a transition that happens very easily. So I could argue the opposite, in that maybe because that market share hasn't changed yet, therefore the playbook remains the same. It's a fair one, though.
I understand the American reaction. I can understand that ultimately the US consumer is potentially the stronger one right now. Maybe expectations around the luxury names are so low in China that maybe any kind of a stimulus should deliver some sort of upside narrative.
And just mentioning, because we had this in the show a little earlier on, media stocks also in focus, guys. So WPP up by 3.5%, Publicis up by 2.6%. All of this, you know, on the back of that talk over the weekend about further M&A activity, consolidation within advertisers in the United States.
WPP is on this kind of slow transition. It's trying to kind of change a lot of things at the same time, but it's taking a bit of time to get that done. Does this basically drive a need to maybe move faster on that process? But it's interesting, does this reignite consolidation within the space? Are Publicis and WPP consolidators or consolidatees? I'm not sure that's a word, but I think I just made it up.
Yeah,
we'll wait and see. But yeah, it's interesting to see that this is being taken positive. For an all-stock deal in the States, it's quite interesting to see such a big reaction.
We kept waiting, I think, for the majority of this year for that capital markets activity to warm up, and it's finally showing up in a pretty big way. Let's bring in a little bit more expert analysis here around the opening trade. Maria Weitman joins us this morning, head of equity research over at State Street Global Markets. Maria, a pleasure to have you on the program as always. We've got a lot to go through with you, but let's go with maybe our top line this morning, which is that China read-through. You just heard our debate around the table talking about whether playing China via French luxury is the way to play China. What do you think?
Yeah, good morning. To be honest, I'm a little bit skeptical on China. I think we need to see really big structural reform, and what we've been seeing so far is a kind of drip feed of kind of moves in the right direction, but probably like little steps as opposed to kind of big structural reform. So what we know, the problem in China is obviously we have a huge property problem. We had huge lack of consumer confidence. So, I mean, giving a little bit of money to Chinese consumer, would they go out and spend if their consumer confidence is really on the floor, given the kind of political situation is kind of anti-ostentatious spending? I'm quite skeptical. I think that's probably a move to fade.
Well, I'm so glad you said move to fade, because my next question to you was going to be, is this something you just trade for kind of the short-term volatility, basically catch the spikes, and then ultimately, is that the vehicle you use then to trade this kind of stuff?
Yeah, no, potentially, because I mean, what we've been saying is that every time there is like some policy announcement, investors get excited. We see inflows into Chinese market. I mean, European luxury is a good play on it, and then there is very little follow through, and we still see like latest data in China, there is still, I mean, at best stabilizing. I mean, if you're very generous. So yeah, no, I think it's short-term move. You play, and then yeah, there is very little follow through.
Okay, Maria, we hear that loud and clear. We've also heard loud and clear in the past from you your views on US tech, and you know you've liked US tech for a very long time. You've seen no alternative perhaps to the US and to some of those very profitable businesses that might benefit from tax cuts coming down the line. Is that still the view? Is there anything on the horizon that you can see that will shake your view on that?
Yeah, I think I'm very firmly into Team America. I mean, there are structural things, like we know that like margins and profitability in US are a lot higher than in Europe, in Asia. So those things are not going away, and I think it's to do with like how deep capital markets are and what are labor regulations and taxation policies and things like that. So that's there. And then we have a cyclical element, and we know, I mean, I don't need to tell you about US exceptionalism, so that is still there. And other countries really struggling. I mean, it's going from like economic stagnation to political uncertainties and things like that. So it's difficult to see why would investors move money out of US into other regions. Yes, valuation is expensive. Yes, positioning is crowded. But what is super interesting to me when I look at State Street custodial database, investors increased holdings in US this year. So despite all these concerns about kind of overextended position, people still putting money there. So that to me is kind of validation of this idea that there is kind of no really good alternatives.
Yeah, I mean, Maria, are you concerned at all that there might be complacency around a second Trump presidency? Yes, there's the positives for corporates around tax cuts and some of the other policies that could be positive for US business. But on the negative side, some people are concerned about what this means on immigration. That's played a big role in that US exceptional growth story, and indeed inflation. And even President-elect Trump over the weekend not ruling out that this might push up prices for Americans.
Yeah, no, I mean, I hear a lot like those concerns of other markets.
Maria, good morning. It's Guy. Are you still holding lots of cash? What would persuade you to deploy that cash? And is that cash a downside protection risk for your US equity holdings?
Yeah, absolutely. I mean, I've been jokingly suggested that the best trade would be U.S. tech and cash. So that perhaps is still the trade, is that you have like a lot of upside on U.S. tech, as it like the fastest growing, the large cap quality seems that we are like playing. But I'm quite concerned about kind of the rest of the market, because profitability is really not there. All of the kind of earnings, I think, globally or US is still very much coming from tech sector. So other parts of the market are not performing as much as we would like to. So having that kind of cash buffer, or like short duration, or like the way you kind of express that, kind of makes sense to me.
Maria, what would it take to get US equity markets lower? What would it take to get the S&P lower right now? Is a full-blown recession required? Fed rate hikes potentially required? I'm just trying to think of, those are two unrelated items, but what would it take to get US equities to go lower at this point on a significant and maybe sustained basis?
Yeah, no, that's a really good question. I think, I mean, there's a lot of strengths of U.S. market come from tech sector, and that's been really the kind of the engine of U.S. stock market. So I think if you can imagine a scenario where a tech sector really goes down consistently, I don't know, I mean, very strict set of regulations and kind of breaking kind of those, I mean, quasi-monopolies, that potentially would be something that really kind of sustainable underperformance.
But you don't see that happening. In terms of...
I don't see that happening in the short, medium terms. No.
Okay, so therefore 2025 is another good year. 2025 is another year when equity markets in the United States continue to rally.
Yeah, no, that would be kind of our central view, that there are good reasons for U.S. market to continue going up, definitely.
So the market just this exceptionism, this gap with the rest of the world grows wider next year. How far can it stretch?
I mean, it's an interesting question, because we had about 15 years of this gap between U.S. outperforming the rest of the market. I think 2022 was a short blip when it didn't happen. So yeah, no, and I think that there are good fundamental reasons, right? So earnings in U.S. have been stronger than the rest of the market for 15 years. So it makes sense that U.S. stocks outperform the rest of the market. So it's not like completely irrational idea that U.S. stocks do better because they grow faster. So that makes sense to me.
Maria, when you talk about the growth factor, Guy and I talk a lot about simply this idea of whether the stock market can actually come down in the United States. And it kind of feels like we're talking about these recessionary risks as well. But even
the worst of times, don't capital flows just support the U.S. equity market in all states?
Yeah. I mean, you have this kind of dollar smile idea, right? So dollar goes up in bad times and good times, and kind of struggle in the middle. I think there's a similar idea about U.S. market as well. So if there are like big risk concerns, and at least on relative basis, U.S. stock market should be supported as investors pull capital back there. And I mean, the other really interesting observation I recently had is if you look at MSCI growth style and MSCI quality, 7 out of top 10 stocks overlap. So in a way, it's a quality market. So I don't know, you can construct an argument that like your tech mega caps are actually quality stocks and safe stocks, and that's where you should seek solace if you're kind of concerned about drawdown and slowdowns.
Maria, can I ask you about M&A as a theme? It seems as if we've been waiting for a long time to get this M&A cycle kicking off again. Investment bankers talk tentatively about seeing early signs of that, and maybe even more so in the last few months. And again, some people saying under a second President Trump term, we might see more M&A. Is that something you're going to be playing?
I mean, it's again. I mean, no doubt the investment bankers talk about M&As. That's their business, of course. I mean, to us, it's really about interest rates. So should interest rates come down substantially, that usually sparks big M&A waves. So it's less about regulation. It's more about capital and cost of capital. So those things need to happen. I mean, right now, market is not pricing market is pricing normalizing policy. Market is not really pricing like very loose policy, which usually spark big M&A activity. So I'm somewhat skeptical.
Great to catch up. Always appreciate it. Thank you very much indeed for joining us throughout this year. We look forward to seeing you next year. Maria Weimana, Head of Equity Research at State Street Global Markets. Core 6 looks like this, dominated, you could argue, by what is happening with the luxury space. Look at LVMH up really quite nicely this morning on the back of the news we're getting out of China. Is that the right way to play this narrative? I think that's going to be a discussion that maybe runs a little bit as we watch what the news flow looks like around China and the deliverables. It's interesting that Ferrari reasonably stable this morning. ASML ticking a little bit lower. Nestle saying unchanged, which also makes me a little bit skeptical as to what is going on. But the story, it certainly seems, is LVMH.
And sticking with that, of course, I want to get more on luxury theme as well, because you mentioned LVMH, but looking at the CAC 40, you're seeing others as well. You're seeing Kering, you're seeing Hermes, you're seeing L'Oreal, and all get a little bit of a boost from this China story.
Yeah, absolutely. So we're seeing it play out in the luxury space in France and beyond. We're also seeing it play out in basic resources. So the best performing sector this morning is the basic resources sector, and we see that iron ore prices are now up by 1.8%. So no surprise there that adds up to some better performance from the likes of Glencore, Antofagasta, Anglo American, Rio Tinto, all higher, and the whole sector up by just shy of 2%.
Omnicom Interpublic get together potentially. The Journal's got that story. It's an all-stock deal. It's having a ripple effect on our side of the Atlantic as well. The two big names out of our part of the world, wire and plastic products, WPP as it's probably better known, tracking higher this morning. Publicis out of France, it's now a big arrival. Both stocks rising on the back of this. Does this spur maybe extra activity to turn these businesses around, particularly WPP, and push it along a little bit faster? The market certainly seems to like the narrative around this story this morning and is lifting these European stocks on the back of that all-stock deal in the United States.
So a deal in the United States, potentially a deal here as well in the private equity space that's caught my eye this morning. CVC set to be in talks with German software firm CompuGroup to potentially take it private. This is a company, a German software company, that's been under some pressure for quite some time. And that takeover bid, or at least the talk of it, seems to be moving those shares. CompuGroup was halted for volatility earlier. It looks like it's now higher by about 31%. CVC is seeming to rise as well. It usually doesn't happen in a takeover deal, but this morning higher by about 0.8%. A starting potential offers price of €22 a share.
Let's turn back to the BPM story. Credit Agricole listing at stake. We've got a fight on our hands.
Yes.
It's going to be really interesting to see what happens around this one. So does Agricole want to hang on to it? Does it see it as being its future to maybe control this business going forward?
Yeah,
what does that mean for UniCredit?
And it seems to be taking a line out of the UniCredit playbook in terms of how it gets hold of these assets, because it's going after it with derivatives in the short term. So with derivatives, it's taken its stake up to 15%. It's actually seeking to take its stake proper, if you like, over 10%. So it's seeking permission to do that. But in the interim, it's done it with derivatives, and it's going to ask to be able to go up to 19.99%. And of course, we know that UniCredit wants this asset too.
In some ways, you could argue this is a way of driving an even better deal. So do you just roll over straight away and go...
Because you're an existing shareholder.
You're an existing shareholder. Do you want to buy my shareholding at this price? Maybe the answer is, no, I don't want to buy it at that price. Cool, I'm going to take an even bigger stake, and I'm going to make it even more difficult for you to take this business over, and therefore you are going to have to maybe come harder with a better deal for me if you are UniCredit? Or is it, actually we think this is a good business going forward, and actually we'd like to stay involved?
Well, what I thought was interesting was that Reuters reporting that Italy has actually approved this. They've approved this Credit Agricole stake when they haven't approved the UniCredit. And I think that's such a turnaround from that kind of domestication, isolation kind of story that we were talking about with commerce.
Governments don't like to be surprised, seems to be the story at the moment. If you come at us with a surprise, then our initial reaction is, whoa, back off a little bit. If you come at us with a deal that's kind of that is incremental and we understand, then maybe you get a better reaction. You can argue maybe Agricole's in that position. We've already got a stake. We'd like to maybe increase that stake.
Yeah.
You know us. We already understand this relationship. I suspect they know UniCredit as well. But that maybe is what seems to be coming out both in Germany and Italy.
Maybe there is something in the art of some of these deals. Coming up on the programme then, we'll turn our attention back to China. We've had a lot of news flow out of China this morning. China vowing more support. Luxury stocks and the Hang Seng cheer. Basic resource stocks cheering. We'll cross to Beijing to get the latest. Just how significant is this news that we've had out of the Politburo ahead of the Work Council meeting? This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kayleigh Lyons deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Alim, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
Punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve. This is Bloomberg.
Welcome back to the opening trade. We are 22 minutes into what is turning out to be a very eventful session here for European stocks. We're up across the board. Stock 600 up by 0.3%. And it seems that basic resources and luxury stocks are getting a boost from some of the news flow we've seen coming through from China. China's top leaders are planning to loosen monetary policy and fiscal spending in.
That's the first change we've had in about 14 years. And so the last time that it was described, monetary policy was described as moderately loose, was right in the aftermath of the financial crisis in 2008. So you get a sense of what the leadership sees before it.
John, is this more talk or is this walk? Is this just kind of, we're going to do this and ultimately investors can be disappointed? Or should I take this as a certainty that this is going to be delivered upon?
I think we should take this as the opening of the gates to more stimulus, that once the Politburo has said this, the Politburo is made up of the 24 most powerful politicians in China. So this is the political leadership saying to the technocrats, to the central bank, to the finance ministry, you should now go out and do more. We should expect more.
But John, can you explain just to our global audience who maybe isn't following the story, to your point, this has been several iterations of that fiscal support. Why is this time different? What are they doing that's different that may stick?
So we've seen lots of things done sort of in a gradual way, nothing over the top, nothing, as people were saying, the markets wanted to see a big bazooka moment from China. We have not gotten that. This seems to show that the leadership has really had a mindset change. I think that has happened because the data that we've seen since the stimulus that was launched at the end of September going into October, that has not had the outstanding pronounced effect that I think the leadership was hoping for. I think that's why we are getting more now.
John, the way that this plays out in Europe, I mean, for many years, good news out of China has meant you buy basic resource stocks in Europe and you buy luxury goods manufacturers in Europe because you predict better things for the housing market and the Chinese consumer will go out and buy more European luxury products. On the latter of those, is that still the case? We were having a conversation about whether the image of European luxury in China has changed because of geopolitical tensions. Would we expect this to be the same this time around?
I would expect that if Chinese consumers get more money to spend, they will go out and buy LVMH. They will go out and buy Gucci. They will go out and buy those products. They still hold a lot of cachet. Those companies are still spending a significant amount in terms of marketing. What has happened in terms of slowing growth in terms of luxury spending here in China is the property bust, the stock market being in the doldrums, people feeling poor, they are holding back on their spending. If what the government is doing now or is signal it's going to do, if that can resolve that situation, I would expect a return in spending.
Going to leave you there. Senior Executive Editor for Greater China Region, John Liu, thank you very much indeed. Coming up, what are we going to be talking about? Small caps. Are they going to continue to outperform in 2025? JP Morgan strategists think so. We say small caps. European small caps or US small caps? Because European small caps, much less so.
He's got a global view in his notes, but obviously it seems like there are different regional stories there, Critty.
Yeah, how much of it is a political trade? How much of it is a momentum trade or even an interest rate story from the ECB?
Well, it's just an economy trade, isn't it? The US economy has greater momentum. Small caps tend to do better when an economy is doing better. European economy not doing very well, therefore small caps underperforming. Is it as simple as that? And does that continue to put money into the United States? Anyway, we're going to find out next. Lovely sunrise this morning. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Every weekday, only on Bloomberg Television. Context changes everything.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is the opening trade around 30 minutes into today's session. Seeing green on the screen across the European stock market, perhaps paring back some of the gains we saw earlier. Remember, we did get those China headlines. It boosted a lot of the stocks. We're seeing a lot of it driven by France and the French luxury story as well, not to mention basic resources in the UK. Now maybe simmering down just a little bit, Anna.
Yeah, let's talk about the difference between small and larger businesses, shall we? JP Morgan strategists say that small and mid-cap stocks have the potential to deliver double-digit gains next year under a best-case scenario, although, quote, a lot can go wrong. Joining us now is their global head of small and mid-cap strategy, Eduardo Lecubari, obviously hoping that things don't go wrong. Eduardo, thank you very much for joining us. So your expectations then for small and mid-caps, you say that they will go on to outperform next year. Is this a Trump trade or does this predate the Trump trade?
So I think, Anna, Trump definitely is a catalyst for small mid-caps to continue to outperform. I think it's important to notice that it's already kind of happened in the last 12 months. So small mid-caps underperformed large in 22, in 23. But then November of 23 to here, they've stopped underperforming. And I think Trump can definitely mean a continued of strength. Because what Trump does is basically he has ignited a preference for domestic versus international exposure, and small mid-caps are more domestic.
Okay, so sticking with the US, this is interesting because a lot of the conversations we have about US stocks has been around the big tech names, of course, the likes of NVIDIA and all of the other large Magnificent Seven, and a lot of the broadening out conversation then takes you to this small and mid-cap trade. So this has a lot further to run then. Under Trump, we see a lot more broadening out of US trade, you think?
I think so. So it's interesting because the last 3 years, I think the best way to describe it is what has happened is a temporary underperformance of small mid-caps for reasons that are temporary, but that the investment community has chosen to read as a new reality, right? And so what you're looking at here is investors having put a lot of hopes on large caps becoming this better asset class in a way where now 150 of the S&P 500 companies are trading on a PE above 35 times. You have things like Walmart on a trailing PE of 44 times, right? And I think one has to question that. So from here on, I think what you're going to see is that the reasons that small mid-caps have been penalized, i.e. in the last 2 years they had weaker earnings growth, those reasons that were completely temporary, it was, interest rates going higher in companies that have more floating debt and wage inflation being high in companies that are more labor intensive. All of that is behind us. And from here on, you're going to see the rewards of what you've always seen in small mid-caps, which is better growth, more thinly covered, M&A, everything else.
In the US, this kind of makes sense. The economy is doing great. So therefore, small caps, mid-caps, maybe have a catch-up. Here in Europe, the economy doesn't feel so great. So why should European small and mid-caps catch up?
Well, you have to look at the nature of a mid versus large. And there are a lot of reasons why historically they've done better than large cap in terms of returns. And those reasons are still true today. So these are smaller businesses earlier on in their stage of development, and therefore they produce higher growth, regardless of what the overall economy is doing. That was the case historically. It is the case today. These are businesses that sometimes get taken out. In Europe, 5% of all the small mid-caps get taken out in M&A deals every year. The average premium is 30%. If you do the math, that's 1.5% of alpha versus large just from M&A, right? And then you have IPOs, like 99% of all IPOs, which is new businesses, new industries, is all SMID. So all those drivers of growth are still there.
But we haven't seen much M&A and we haven't seen many IPOs.
Well, that's an interesting concept because that is definitely a consensus view. But when you look at the numbers, it's not really true. The biggest IPO year was 2021, right? And if you look at M&A, since 2010, it's been exactly the same year after year. It's been around 100 small mid-caps in Europe taken out every year for about a decade.
Okay.
So this perception that IPOs are not happening is perception. And this perception that M&A is not happening is perception. In fact, this year, number of M&A deals are up versus last year. I think there's a very good chance to think that 2025 is going to see M&A, number of deals in M&A just shoot up. For all kinds of reasons.
But isn't 2021's outperformance on that front just a function of the capital markets being very, very closed in 2020? So it just kind of led to this excess of 2021? Isn't that kind of the reason for their outperformance? It wasn't necessarily a fundamental story, was it?
So IPOs tend to go with the market, right? So they peak when the market peaks and they come down after that and so on. 2021 was a peak of the market and it was a peak of IPOs, but not in any way that was different from what we saw, for example, in 2007, in 2000. It's just that when you put it all in a long chart, you realize that globally, number of IPOs in small mid-caps, they were bigger in 21 than in 2007 than in 2000. So you always have these peaks and troughs along with the equity market, but they haven't gotten smaller, they've gotten bigger. So IPOs are happening.
Let's come back to where we started the conversation, which was on the fundamentals behind small caps. You mentioned that there might be a Trump trade about there as well. But don't small caps trade very closely to your biggest caps? Which brings me to, is the small cap trade ultimately just a momentum trade as opposed to one that is maybe driven by Fed cuts, Trump policy, et cetera?
So historically, you're right, Kriti, SMID is a bit of a beta play, right? So if the market goes up, they go up more. If the market comes down, they tend to come down a little bit more. What's interesting in terms of what we're living through at this juncture is there's been 2 times when that hasn't happened, right? When large caps outperform on the way up. That was the tech bubble and the situation we're living in today. And in the tech bubble, when that bubble burst and the stock market came down, it wasn't small mid caps that underperformed. It was large caps that came down more. What went up came down. And there is a very good chance that you see that here. So now small mid caps is not just a beta play, but you are sitting here in a situation that is completely abnormal, where it's SMID caps that didn't benefit on the way up, and where the valuations, the fundamentals, the sentiment around it is all pointing to, I think, what is a 3-year story of outperformance from here on.
Eduardo, are there other geographies that we should be talking about when it comes to the small and mid-cap story? I'm thinking, we had a lot of news out of China this morning about stimulus in the Chinese economy. We've had a lot of news over the past week from South Korea and colleagues writing about how the Kosdaq is underperforming the Kospi, and that is perhaps a sign that people's expectations for the economy domestically are really weak. Are there other geographies that stand out to you as worth mentioning?
So, Anna, I think when you think about geographies in the world, and in line a bit with what Kriti was saying, you have a situation today that is different in developed markets and emerging, right? In developed markets, you've seen SMID underperforming large over the last 3 years by an order of magnitude more than ever. So there is that kind of valuation story. And in emerging markets, that simply hasn't happened. And so there is, in one end, the underperformance and the value, and on the other end, what Kriti was saying, this is a beta play to the economy. Where is the economy growing? Well, you have more than 2% real GDP growth in the US, and you have 0.8% in Europe, to give you an example, right? So the best case is where you find that underperformance and you find that economic growth, you have to look at the US, you have to look at Japan, and you have to be short Asia, and you have to be short Europe, I'm afraid.
Do you have to be short Europe even in the face of interest rate cuts that might accelerate out of the ECB?
So it's a good point. You have to short Europe on a relative to basis. It is true that in Europe is going to benefit, or you should be benefiting from a real interest rate that has gone from 4 to 3.25, and let's see where it ends. But at the same time, the real economic, real GDP growth last year was 0.8, and our economics team expectations for this year is 0.8. So the growth isn't here yet. But Europe is a big part of the world, and there is Europe, and then there is Europe. So, for example, within Europe, there is the Nordics. And in the Nordics, your average small mid cap after 2 years of underperformance is offering a 7% average free cash flow yield, which looks quite interesting. So I think there is definitely opportunities. Also think about this, 40% of small mid caps across Europe, in the UK and in the continent, 40% are down more than 40% from the highs of 2022. There is tremendous opportunity at the stock level, right?
Gotta leave it there. Very interesting. Eduardo, thank you very much indeed. Eduardo Lecabari, Global Head of Small and Mid-Cap Equity Strategy, joining us from JP Morgan. So Volkswagen and its labour unions are entering the fourth round of talks, basically to try and sort out exactly what's going to happen next with the footprint that VW has, particularly in Germany. We've got lines coming out of Wolfsburg now from the workers talking about the fact that they are ready for more warning strikes. They're warning about more warning strikes, effectively, as we come towards this latest round of talks. How this ultimately gets resolved, are we going to move from warning strikes to more significant walkouts? We will wait and watch. But this discussion continues, and it's a struggle to get to some sort of solution at the moment. As I say, the fourth round of talks now between management and the union. We'll turn back to geopolitics next. Syria celebrating the fall of Bashar al-Assad. We're going to look at what the country's next chapter looks like, which regional powers stand to lose out as well. We're watching what is happening with Russia and Iran. Does Turkey come out as the winner in all of this? We'll discuss that next. This is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Welcome back to the opening trade. We're about 44 minutes, if you will, into today's session. Seeing green on the screen, perhaps not with as much force as we opened these markets, but you are certainly seeing a boost. A lot of this coming from the headlines out of China, this idea of stimulus perhaps boosting French assets at a time when we're still waiting for that political overhang, a little bit more clarity on who Emmanuel Macron is going to be choosing as his new prime minister, caretaker prime minister, if you will, certainly. But for now, green on the screen. Let's go back to our top story, though, and that, of course, coming out of the Middle East. Bashar al-Assad has landed in Moscow after Islamist-led forces led a lightning advance through Syria, entering the capital on Saturday evening and ending more than half a century of his family's rule. Assad's toppling comes after more than a decade of war, 600,000 deaths, and the world's worst refugee crisis since World War II. We're joined now by Bloomberg's Patrick Seitz, joining us this morning from Istanbul. Patrick, from your vantage point, walk us through how this is being interpreted in Turkey and in some of the kind of bordering states. How bad is this for the people of Syria?
I think many Syrians will be celebrating, obviously, the events over the weekend. Whether or not that means they can return to their homes and at what point they can do that, I think remains to be seen. That will depend on things like whether HTS, this main leading rebel group, lives up to the kind of message of tolerance that it's been preaching on the way to Damascus. There's also, individual security incidents like last night we saw in Damascus, explosions late overnight, showing that, while the takeover of power has happened in the heart of the state, that doesn't necessarily mean that clashes are over. So I think anxious optimism among Syrians, good news, but not the end of the story by any means.
Patrick, can I ask you about the rebels and the various factions within that? I mean, HTS gets a lot of the headlines. There's plenty of coverage of others, SDF, SNA, a host of other rebel groups. Is HTS likely to be in a position of power in Syria? There are others waiting in the wings, no doubt, to challenge them. I understand they've been united up to this point by their dislike of former President Assad, but now he's gone.
Yeah, that's right. I mean, I think the way in which they've come to power so quickly and the sort of military, diplomatic, to an extent, prowess that they've shown on the way is definitely going to give them an upper hand in the sort of talks that go towards forming a new government in Syria. But you're very right, they're not the only ones on the scene. I think the other areas to watch will be the north of the country, because, HTS has taken over Damascus, but Assad, from whom they've taken over, wasn't in control of the whole country anyway. So in the north, you've got other Turkish-backed factions. You've got the US-backed Kurds as well. I think those are going to be the other key groups to watch now, both backed by big powers with big interests still in the region. And it's not clear how they're going to get on, cooperate with, or clash with even HTS from Damascus.
The Israelis have moved in to parts of Syria. We haven't seen this since the 70s, 73. What's the objective here? How worried will the Israelis be about what these new groups will mean and whether or not they take a more bellicose attitude towards Israel? Is that the fear here? And is that what maybe the Israelis are trying to preempt?
Yeah, I think it shows to an extent that they're obviously worried about a security threat from HTS. It's worth remembering, of course, that group has its roots in Al-Qaeda. I don't think there was a particular imminent threat to Israel at this point, so I have to assume it's a sort of a precautionary measure. And it basically extends that Israeli presence that was already there from the 60s, excuse me, when they occupied and annexed the Golan Heights. So I think it shows them extending that security buffer. And as we've seen elsewhere in the region, in Lebanon, for example, they're trying to build an environment at home where their own citizens feel safe, just as they've done in northern Israel, going into Lebanon to do that for their Israeli citizens in the north. I think they're doing the same here in the Golan.
Yeah, they're describing it as a limited and temporary step. Patrick, thank you very much indeed. Bloomberg's Patrick Seitz joining us out of Istanbul. Let's talk about what this all means for Europe. Bloomberg's Ollie Crook joins us now from Brussels ahead of a meeting with EU finance ministers. Talk to me about the reaction thus far out of Europe when it comes to the fall of the Assad regime and what this ultimately means for Europe, the Syrian story has had a meaningful impact in Europe over the last few years as a result of migrant flows.
Absolutely, guys. So I think it's going to be sort of fundamental from that migration perspective. In terms of the sort of initial reaction from the leaders here across Europe, I think it has been more or less ubiquitous. It is fairly optimistic with an even larger dose of concern and also caution. We heard from Kaja Kallas, the sort of EU foreign envoy who just took over the job, will be there for about 5 years, saying that the end of Assad's dictatorship is a positive and long-awaited development. It also shows the weakness of Assad's backers, Russia and Iran. This is similar rhetoric to what we heard from Biden over the weekend. A lot of the sort of Western countries wanting to take some credit in some way for undermining basically Russia and Iran's position in their ability to support the Assad regime. But that sort of caution comes in the form that though this has been a relatively sort of tidy shift of power, a lot of this will come down to Abu Mohammed al-Jolani, the leader of HTS, who obviously is a former sort of al-Qaeda, but who gave a very interesting interview to CNN a couple of days before basically marching into Damascus, saying that what he wants to do is bring sort of institutional rule back to Syria, away from individual leaders. He talked about protecting minority groups and talked about a legal framework to preserve that. These are the sorts of things that many Western leaders will be very happy to hear, whether or not it is true and to what degree he is capable of doing this, given all the fractured cells, as you have just been discussing. The focus for the Europeans will certainly be migration. I mean, you don't have to look any further than Germany. The Syrian civil war started in 2011. AfD, Alternative for Deutschland, the far-right anti-immigration party, was founded in 2013, and then 2015, Merkel let in more than 1 million refugees. And now, fast forward 2024, 2025, AfD holds about 1/5 of the vote, 20% of the vote, and the Syrian population is still the #3 population of all of these sort of groups within Germany, so really still a protagonist. The other side of that coin, however, is if you do get stability ultimately back in Syria, could some people go back there? These are all the things that are in play, and they will be in front of ministers who will be sort of affecting or appraising the effect of what's going to happen over the next few months.
Ollie, there's conflicting views coming out of the United States. Joe Biden authorizing launch strikes within Syria. Donald Trump posting about the fact that the United States shouldn't be involved. What is the European take there? Is there a European take there that aligns with one or the other?
Yeah, I think that Europeans are very reticent to have any sort of active military role in many of the sort of conflicts in the Middle East. But as you say, Joe Biden, having the strikes of dozens of different Islamic State sort of groups within Syria. Obviously, Donald Trump giving a fairly contrasting view, saying that the United States should have nothing to do with it. This is not our fight, he says. Let it play out. Do not get involved on Truth Social. But of course, there are other dimensions and other sort of players here. The Israelis who have now, have sent troops in for the very first time, admittedly, fairly sort of limitedly. Turkey is on the border, and there's, of course, the question in the form of Iran and Russia. And here the Europeans really do have a stake in them not exerting their influence. So I think that for right now, they're just going to probably follow the United States. The question is, what is the United States' position going to be? It seems like it's going to shift fairly quickly in the next 5 or 6 weeks.
All right. Thank you very much. Bloomberg's Oliver Crook, thanks for the update there. Let us focus in on what is ahead this week then. A quick look at the plan from here. We have plenty of events to focus on. A Eurogroup finance ministers meeting, including Rachel Reeves. Ollie will be around to tell us more about that. Tuesday, we'll linger on this for a moment in just a second. Women, Money and Power. That's an inaugural event coming to you from Bloomberg, and we will be there live. On Wednesday, we'll have a host of data. We'll have US inflation data. The Chinese policy meeting takes place. And on Thursday, an ECB rate decision. Let us circle back to that Bloomberg Women, Money and Power event that takes place tomorrow here in London. And let's bring into the conversation Adeline Diab, Director of Research and Chief ESG Strategist at Bloomberg Intelligence, who has just released the BI, Women Capital Report, so Bloomberg Intelligence Women Capital Report ahead of the event. Adeline, very nice to have you with us as we look ahead to our coverage tomorrow. So importantly, in your research, what's the big picture story around diversity and employing more women in your workforce? Does that diversity pay off?
So yes, the good news is that it does pay off. So companies with a greater number of women on their board have delivered 2 to 5% higher annual return in developed markets in 2018, and 2 to 6% lower volatility in emerging markets, in markets that are by nature more volatile, so helping weather those. So this suggests that, diversity as a quality signal that can help reinforce investment decisions, but also board conversations.
Walk us through what that means or what that looks like regionally. Are you seeing a divergence between, say, the States and Europe?
So yes, the states have led the charge initially, but the EU has been more at the forefront for the past decade. In some countries, we see numbers exceeding 40%, and actually we could see even parity in Europe by 2030. But the stark difference remain more in emerging markets, but also in some G7 countries such as Japan. But regulations and shareholder activism should drive progress. So, for example, in Japan, there is a new target calling for 30% of executive female ratio by 2030. This suggests over 1,000 women director appointment opportunities over the coming 5 years. So this could be a game changer.
Do you think the Trump administration reverses some of the progress that's been made?
So there are risks there, obviously, and we have seen some companies start to retreat from their D&I programs, but many remains committed. And I would say, basically, whether you believe that diversity is a moral imperative or not, at the end of the day, the higher performance linked to higher diversity shows that it has a financial and a business case. So this should bolster D&I programs.
All right. Adeline Diab, Director of Research and Chief ESG Strategist over at Bloomberg Intelligence, joining us around the table to walk us through, of course, this very crucial issue and the divergences, the progress that's being made, and, of course, what 2025 and beyond looks like. Tomorrow, of course, the opening trade will be live from Bloomberg's inaugural Women, Money, and Power event. We'll be speaking to Danielle Poley of Oaktree, Ann Walsh of Guggenheim, Joan Solitar of Blackstone, Ida Liu of Citi. And that's just a taste of the all-star guests that we have, and then, of course, the panelists at the event as well.
There's some fantastic panelists. We're just the starter.
Yeah, we're the opening act.
We're the opening act of this event, and then gets going throughout the rest of the day with some fantastic panels. So it's going to be really interesting to see exactly what their world looks like in a more Trump-driven environment. I suspect they're going to be talking more about the investment story and what they see in front of them. But at the fringes, does that change? Does the performance metric, therefore, you could argue, if the data are correct, change if we see Trump pushing back against this?
Yeah, perhaps. And certainly that'll get some airtime, but a lot of it will be dedicated to just hearing what these experts in their field think about global credit markets, about private equity, around wealth management. So there'll be plenty of those conversations, not least in our programme tomorrow. So we'll be joined by a host of, as you've been through, Kriti, a host of fantastic names, and highlighting some of the research that Bloomberg Intelligence has been doing on this front as well.
And that, of course, is something we're going to be keeping an eye on for tomorrow. But then we've got the rest of the week to think about as well. We've got plenty of data around the world.
Yeah.
China.
Is China less interesting midweek? Now, we've had all of this news already from China, or is there still more to come after Wednesday, Thursday?
It feels like this is something to come later. It doesn't. This feels like a 25 story rather than a 24 story. These are our intentions. We'll see what exactly is delivered upon at the beginning of next year. With CPIs coming up out of the United States, that's going to be fascinating. How dovish does Lagarde sound? I think it's going to be fascinating as well. What data are we going to get from the ECB? There's lots coming up this week, but it does still feel like a geopolitical narrative at the moment.
Yeah, we're still on France watch. We're still going to see what Emmanuel Macron may or may not announce. On Friday, he promised that he would announce a caretaker prime minister next coming days. Of course, the fallout in the Middle East as well. In the meantime, markets in the green. We'll see if that sticks. That does it for the opening trade. The Pulse is up next. Stick with us. This is Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain. and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Overall, thanks to the China stimulus, shift in China's monetary stance provided this welcome boost for the markets. Happy Monday morning. We've been waiting for a bit of encouraging news for a while. Again, it comes on a very big political week. Not only are we looking at France, South Korea, Syria, the Middle East, but we also have quite a lot of interest rate decision from major central banks around the world, including the ECB. You can see the CAC 40 actually leading the gains, about 0.6% higher. I think luxury stocks on the back of that China news are getting a little bit of a lift. Now, this is the wider picture for some of the cross assets that we're looking at. U.S. 10-year yield 4.1625, euro dollar 105.69, and then the big one that we're watching is, of course, any kind of implication of what China has done on the markets. For the moment, we're seeing it across the board, but the China 8 shares gaining some 3.1%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Bashar al-Assad has landed in Moscow after Islamist-led forces led to a lightning advance through Syria, entering the capital on Saturday evening and ending more than half a century of his family's rule. Now, Assad's toppling comes after more than a decade of war, 600,000 deaths, and the world's worst refugee crisis since World War II.
The fall of the regime is a fundamental act of justice. It's a moment of historic opportunity for the long-suffering people of Syria to build a better future for their proud country. It's also a moment of risk and uncertainty.
In a moment, we'll get market reaction from Sherry Paul, private wealth advisor at Morgan Stanley Private Wealth Management. But first, let's get more from Bloomberg's Sam Dagger and Ross Matheson, our EMEA news director. So thank you both for joining us. Sam, talk us through exactly what we've seen on the television sets over the last 72 hours. Who is now in charge of Syria?
Absolutely great to be with you. I mean, it's been really dramatic, absolutely dramatic for Syrians and non-Syrians who've been watching this. I mean, as you said on Saturday night, it seems like that's when Bashar al-Assad pretty much lost all hope that his overtures were going to go anywhere, because we reported, we had a Bloomberg exclusive that he had made these overtures to both the Biden administration and even President-elect Trump. But none of that went anywhere, so he is now in Moscow. And then shortly after, the rebels, led mainly by, as you said, the Islamist rebels, led by HTS, which used to be affiliated with Al-Qaeda, but has come out and said that it no longer has any links to Al-Qaeda and has gone out of its way to assure Syrians, but everybody's taking a wait-and-see attitude. So we had these, incredible scenes of celebrations in Damascus. I spent 2 years in Damascus between 2012 and 14. I know this area. This is Umayyad Square right there. It's the main square. The state TV is right there. They took over the state TV building and announced the fall of Assad. Yes, we did see some chaos. We did see some looting. People entered the Assad family home. This was really incredible. This is the home where the family has lived for half a century, where Hafez, Bashar's father, who, let's remember, took power in a coup in 1970 and built one of the most brutal regimes in the world, underpinned by this cult of personality and violence and repression. And so Syrians were coming to grips with that. But obviously a lot of questions, but at the same time, a lot of smart Syrians who are abroad, people, we're talking about the opposition, because as you noted in the introduction. Yes, go ahead.
Yeah, no, look, you're an expert on this. You also wrote this very important book saying, Assad or we burn the country, one family's, lust for power. So you understand, of course, in minutia, what Syria has been going through. The turning point here is also that Russia could not really get involved. So what does this mean for Russia and Iran losing power in the region?
Excellent. You could say Iran is for now, completely out. Russia has been weakened, but it still maintains its air base in Latakia, which is on the west coast. It has this naval base in Tartus. Russia has had this base for decades. But I would say that Moscow now is going to work with Turkey. Turkey is the main player now on the ground, at least on the rebel side, right? So you're going to see the Russians and the Turks working a lot more closely. And now, obviously, Israel is now that Iran is out, Israel is asserting itself, in a big way, because it does have major concerns. It has concerns about who these people are. As you said, there's a vacuum. It's worried about what's going to happen to a lot of the heavy weaponry and also chemical weapons, potentially. We don't know if there are any chemical weapons left, but this is a concern.
Sam, thank you so much for, of course, all of your insights. We'll continue keeping a very close eye on the story and go back to Sam Dagger for expert analysis. Now, let's also bring in Bloomberg's Ross Matheson, and then we'll talk markets with Sherry Paul. Ross, first, when you look at the wider implications, what does this mean for the Middle East, but also China? It feels like the world is being redrawn almost on a monthly basis.
Well, right, as Sam was just saying, you've got the chessboard in the region. You've got a lot of questions now about the role of Turkey, of Iran, of Russia, of others. Also the US, of course, with the change of administration coming there. Donald Trump was very interesting. He was out commenting on Syria well before the White House was, and he was making it very clear he didn't think it's something for the US to get involved in. In fact, he also wants Vladimir Putin focused more on Ukraine and getting towards a ceasefire and talks on Ukraine. So very much a clear message from Donald Trump yesterday. But you've also got China in all of this, because Xi Jinping and Assad, they've had a close relationship for some years. Assad's visited China. China exports the most to Syria of anybody. They're a key partner for them economically. Syria doesn't export anything to China, but China has operations there in the oil sector as well. They want to be preserving their business interests there, their economic interests there. You can see from the Chinese today commentary very much this is a matter again for the Syrian people, hoping for a peaceful transfer of power, but very much they want to be securing their business interests at the same time.
Ross, we know that President Xi and President-elect Donald Trump have spoken on the phone. How's China getting prepared for tariffs? We saw this massive stimulus today. Will that be enough to counter it?
It was very interesting to see this announcement today. It partly reflects their concern about their own economy. They need to juice their own economy, and you've seen sort of steps in the housing sector and so on. It's not really driving demand, and what they're signalling with this language, changing language, for more than a decade, very much on the loosening side, also signaling very more proactive steps. And what that does, it cracks open the door perhaps for the NPC, the big meeting early next year, for them to bust the deficit rules. I mean, they're basically saying, paving the way to be able to blow through their own deficit rules. That gives them space to spend more, and that's about their own economy, but it's also about shielding the economy in the event of further tariffs from the US.
Roz, thank you so much. Let's also bring in Sherry Paul, a private wealth advisor at Morgan Stanley Private Wealth Management. Sherry, so good to speak to you. I'm not going to lie, the concern is that there's so much geopolitics that's not really filtering through the markets. I mean, how many of your clients ask you about, again, a never-changing world, if it's not impacting asset classes?
Yeah, thank you. Well, look, the geopolitical environment sets the tone for the conditions in which we're investing. As a senior portfolio manager, my responsibility is to find the corridor of opportunity in all market conditions. And in this case, I'm really encouraging clients to have the awareness of the geopolitical situation, but the thematics that are enduring, that underpin growth and earnings, is what will drive this market higher, which is why we're remaining very U.S.-centric in our investing right now. But that's the most important thing.
How much do you watch China? Again, today we had, the start of monetary stimulus, which actually the Chinese policymakers probably didn't want.
Well, look, it's hard to kind of have your cake and eat it too in China, in terms of if you want to have transparent and liquid markets, along with stimulus with a slowing economy. The bigger issue, I think, is whether or not there's a role for China right now in portfolios. And if anything, I think that that's more of a signal that the thematic that investors need to embrace is the reimagining of global world order and its impact on supply chains, and what that means in terms of who the winners and losers will be in terms of balance sheets that can support that reimagination, because it's expensive and that would weigh on earnings, which is also why we continue to favor the big cap space, because they've got the balance sheets to reimagine that.
I mean, Roz, over the weekend it was pretty incredible looking at, the Notre Dame pictures with all the heads of state, Donald Trump showing up with Elon Musk. I mean, is he actually starting to talk policy on tariffs?
Well, Elon Musk or Donald Trump, or both, possibly, on tariffs. It's interesting, Donald Trump has again last week raised the questions around tariffs on Canada and Mexico. The question is, what is he using that as a tactic for? Is it a tactic to get agreement? He's used migration and drugs on the one hand. He's saying, you countries need to tackle these things or I'll put tariffs on you. So he's using it as a political tool, not, as a purely economic tool. Is he doing it now before he gets in office so that these countries will come and say, okay, we hear you, we'll do this on drugs or migration, and then Donald Trump can claim the win? But it does seem that he's very much attuned to the idea of just using tariffs at a moment's notice too, by the way. I mean, he could just wake up one morning and decide, today I feel like putting X tariffs on French brandy again or something, or steel in Europe. And that's the uncertainty that he keeps people going on, but very much using this as a political tool. He's shown that before he gets in office. The question is, does he actually enact it once he's in?
Yeah, and that's $1 million question for the markets, Sherry. Are we going to get a lot of volatility when it comes to some of the emerging markets, or are we going to see big countries like China trying to preempt by making sure that their economy is more solid?
I think the answer is both, which is why we should all expect increased volatility going forward over the next year. I think at the centerpiece of this, though, is also this acceleration of AI as a solution set for slowing economies around the world, as this productivity enhancing cost reducing technology. It has an equal, opportunity installation if business models are willing to take it on. It also deals with, the politics of human labor around the globe. And so I think that we see this geopolitical conflict be the accelerant for the adoption of more AI-centric manufacturing, much like we saw, I think, the pandemic push people into what I was calling the remote of everything at that time. And I think that will allow the markets to continue to sort of defy what so many people rightfully would understand as a really difficult investing environment. The thematics are just too strong.
All right, so thank you both for joining us. Sherry Paul from Morgan Stanley Private Wealth Management stays with us, and thank you as ever to Roz Matheson. Now, a couple of other stories we're keeping an eye on. Omnicom reportedly in advanced talks to buy Interpublic in a deal that would create the world's largest advertising firm. Now, the Wall Street Journal says the all-stock transaction would value Interpublic at between $13 to $14 billion. Now, coming up, we'll have plenty more, of course, on the U.S. We'll also talk banks. UBS Chief Executive Sergio Armati says rising tariffs and global conflicts could increase risk in financial markets next year. We'll drill down to see exactly where that risk could be. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
These geopolitical events haven't really triggered any more chain events and consequences, also in financial markets. So that's positive. So I think that one cannot be complacent. The acceleration of geopolitical events coupled with potential escalations on the macroeconomic front, tariff. Protectionism, it's definitely something that has to be watched. On the other end, we still see consumers and the economy quite resilient despite all these challenges.
Well, that was the UBS Chief Executive, Sergio Armati, speaking to Bloomberg at the Abu Dhabi Finance Week. Now, still with us, Sherry Paul, Private Wealth Advisor at Morgan Stanley Private Wealth Management. Sherry, I have 1,000,001 questions, not only about U.S. I mean, this is clearly where the smart money is moving to, but valuations are partly stretched. Are they priced to perfection?
Well, not necessarily, because really, if you kind of break apart, the trick right now is to break apart the S&P 500, because if you take out the top 10 companies, the PE ratio of the market itself is around 19 times earnings. And frankly, if we're looking at price to earnings ratio, I'm really encouraging investors to add an additional letter, which is the I for innovation, which is the premium that investors should be willing to pay in this sort of not-to-miss industrial revolution, which is why we're seeing tech outperforming communication services and other beneficiaries of, the installation of AI.
But Sherry, does it have to be U.S. also because of, Trump policies, meaning that there's going to be a lot more reshoring, or can you find opportunities elsewhere in the same industries?
Yeah, no, great question. Well, I think that right now the innovation drivers that are producing earnings continue to sit within the United States. And so so while, for example, here in Europe, I've always been an investor in our client portfolios to some degree in Europe, but my biggest concern, and I think all of our concern for geopolitical stability should be whether or not Europe actually goes into a recession, while the United States has soft landed and stays out of a recession. And if you couple that with a slowing China, then you have 2 out of 3 biggest contributors to global GDP going into recession. That could press things. But one point about that, though, is that just because we get into geopolitical conflict or slowing economies, money doesn't just disappear off the planet. It finds a new home. And so active rebalancing, both at the geography level, the market cap level, and then crucially at the sector level, will be the key to performance, particularly in the U.S. markets, because we've had winners and losers not all performing in an equal basis over the last few years in the bull market that we've been in.
But how much of that money is going to private markets? I mean, we've seen, if you look at, the charts, it's actually incredible over the last 5 years.
Yeah, it is. Well, yeah, and I think that makes a lot of sense if you can access the private markets. But look at how much return we've been able to produce in the public markets with these incredible companies that are leading the way to a new way that a new industrial revolution in terms of how we will operate and how businesses are going to manufacture. It's huge.
Some of the things I know you're also watching for is policy swings, including deregulation, taxes. Again, deregulation, is there too much, I guess, of a Trump trade on the positive side that actually if you deregulate or even if you put tariffs, it comes back to bite you in terms of inflation back home?
Yeah, thank you for asking that, because I really like to separate the two. So there's policy volatility and then there's earnings-driven volatility, very different. So yes, we should see a premium in the market for policy-driven, because the trade, it's a trade. Deregulation, are we going to, or are we not, versus earnings momentum in a company that's actually growing shareholder value. But, obviously deregulation would benefit, small and mid caps and big caps in certain sectors in the U.S. But the tariffs, kind of like, are the backdrop of that, which would be fundamentally inflationary at a time when Americans in particular voted around their perception of inflation in the United States. So I think that would be very tricky.
Sure. You also like healthcare?
Yes. Yeah.
In the U.S. or globally?
Well, in the U.S., and right now it's actually one of the worst performing sectors year to date. I think it's up 9 to 10% against some of the other sectors. But I just remind investors, too, that, in January of this year, financials, which I was overweighting at the time, too, in our portfolios, was also a worst performer until, it had an accelerant. I think that will be the same in healthcare. Plus, you get a good dividend. It's a nice PE setup, and it's a good rotation out of tech. To bring lower volatility and greater stability to client portfolios, is particularly for people who are looking for income and just don't have the stomach to tolerate the swings that we're having to endure to get to those returns in this market.
So interesting. Sherry, thank you so much for joining us today. Sherry Pohl there, Morgan Stanley Private Wealth Management. She's also here for our Woman, Money and Power Conference, which we'll tell you more about that shortly. Coming up, South Korea's president has been banned from traveling overseas, while multiple probes are underway into his declaration of martial law. We discuss that next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching the close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Well, South Korea's Justice Ministry has banned President Yoon Suk-yeol from traveling overseas due to ongoing investigations into his brief declaration of martial law. Let's bring in Bloomberg's Katya Dmitrieva for more. Katya, what does this signal about what may be to come?
Well, there's a lot happening behind the scenes right now, and this is probably one of the clearest signals, that the pressure is really growing on President Yoon and on his party to do something. And that something, according to protesters and according to the main opposition party, is to leave office. Right now, it's looking incredibly unstable, both the political situation, but also Yoon's own position in government. Currently, they're having discussions, and then behind the scenes, as I said earlier, there's a lot happening in terms of what the opposition party is planning and what Yoon's own party is planning. So Yoon's party yesterday said that for all intents and purposes right now, the president is not actually making decisions. It's the prime minister as well as the PPP, that's the ruling party, Yoon's party, is currently making decisions. But that's not really been enough so far for the Democratic opposition. They're looking to impeach Yoon, and they'll be holding a vote on that on Wednesday. But certainly things are rapidly developing up until, the next 48 hours and that crucial vote.
Katya, thank you. Katya Dmitrieva there on South Korea. Coming up, our exclusive conversation with the Audemars Piguet chief executive, Hilaria Resta, on the demand for Swiss luxury watches and her first year in the job. That's next, and this is Bloomberg.
You missed it on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared than in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss the China Show live every weekday.
from the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix in London, and these are your top stories. The world is on watch for more upheaval in the Middle East as the fall of Syria's Bashar al-Assad creates a power vacuum. Now, Israel moves troops into Syrian territory while U.S. airstrikes hit ISIS targets. A boost for Chinese stocks as Beijing makes its first major shift in monetary stance in 14 years, also vowing more fiscal support. And South Korea's president is banned from overseas travel as a series of probes emerge against the embattled leader over his brief declaration of martial law. Now to a little bit of luxury, and Swiss watch exports are on track to post an overall decline this year for the first time since the pandemic disrupted sales in 2020. Now the industry has boomed in between, but is now feeling the pressure of higher rates, probably a strong franc, and wars in Europe and the Middle East. Now, my next guest is the highest-ranked woman in Swiss watches, I would say watches in general. Ilaria Resta became the new chief executive of Audemars Piguet earlier this year, following 2 decades of consumer goods giant Procter & Gamble. Now, analysts say her mission is to stabilize the brand and capitalize on its transformation from a watchmaker to a luxury house. Well, I'm delighted that Ilaria Resta joins me now. Thank you so much. Welcome to Bloomberg and welcome to London, Ilaria Resta. When you look at some of the challenges ahead, how's it going? You've been in charge for a year. There's things that you wanted to do. Are they at speed?
Yes, they are at speed. Of course, as soon as I joined the market, new reality hit, which is in a way a blessing in disguise because it gave me the chance honestly to focus on the strategies and rethink about the growth opportunities moving forward and stabilize this business before continuing the growth.
Ilaria, when you look at your main markets, I know China was a big one with a lot of question marks today. We have stimulus. The U.S., the biggest, of course, market for watches. How are those going?
We are very well balanced in terms of presence by market, so we are not affected by the downward trend in China. We're actually very well spread by country, by region, so we continue solid growth. We're very happy about what we put in place for the future. So far we are not affected by the macroeconomic instability.
I mean, the waiting list, of course, for a watch is huge. Does it mean that as a customer now, I have a shorter list to get the watch I want?
We continue having high demand, and we continue, luckily so, continue proceeding with our production strategy, which is highly manual, highly elevated in terms of horological signatures. So we try to push more complications. Because of that, of course, it's a long process of production, and it takes months, if not years, to develop a new watch.
Ilaria, you almost came as an outsider to the watch industry. What have you learned over the last 12 months?
Well, definitely an outsider. I've never worked in this industry, and it has been a wonderful discovery. Definitely is a different dynamic from the FMCG world where I come from a publicly traded company, and now work in a family company with a different governance. But definitely the common points are the leadership needs, the value creation work that I have to do. Of course, it's a completely different time horizon. Producing a watch is a very, very long investment in time. Sometimes it takes even 10 years to develop a watch. They're quite the opposite of FMCG dynamics.
How many watches do you make? Around 50,000 or 51,000?
That's pretty much where we are.
Will it pretty much? I mean, are you trying to increase that, or actually is demand so important, or is the scarcity of it so important that you'll stay around these figures?
It's not about the scarcity, it's about our strategy of production and manufacturing, which is focused on elevating the complications and the innovation of watchmaking. That's why we focus much more on research, and these activities require time. We want to continue doing what we used to do in the past 150 years ago, which is developing and advancing horological invention, and high-end, high complications are important in the mix of products. So we are complicating more our portfolio.
And so what's the magic in that? Once you have the product, is it how you sell? Is it influencers? Is it, you know, you have the brand is very well known also inside rap music, which has given it an extra leg upwards?
Well, it starts from the watchmaker. When you go to the bench of a watchmaker, you feel the passion and the emotion of the watchmaker passing this passion and emotion in an object, in a timepiece. And it's incredible how this emotion can travel all the way to the final client. And that's why we're very happy to have a direct distribution, because this allows us really to tell stories and to explain what it takes for that specific watch to end on the wrist of our client.
How much do you want to diversify? I know, for example, you know, there's still plans to boost sales of the code 1159, but you have the Royal Oak really dominating the sales.
We want to diversify, first of all, from a client standpoint. We are underdeveloped among women, which is an industry phenomenon. And now we see women actually being more and more interested in mechanical watchmaking and high-end mechanical watchmaking. We are breaking the bias that women are much more interested in jewelry watches or quartz watches. In reality, they are extremely interested in mechanical watches. They are becoming collectors. And by 2030, we estimate that 45% of buyers will be women. And they will buy themselves and build themselves their collection. So no longer the stereotype of the man buying watches for women. So we are trying to cater to women, cater to new generations of clients, and hence our portfolio will be adjusted to these clients.
I mean, does a female buyer shop differently, for example, in Switzerland or France compared to the US or China?
That's what we're indeed analyzing and studying. There is a different retail environment and ceremony that women are looking for. They love actually education, so that's why we're organizing masterclass for women to go behind the scene of developing a watch. We put actually watches in their hands. We dismantle with them just to show what the mechanical movement is. And it's incredible how much they are very interested into the mechanical elements of watchmaking. So we're moving much more into storytelling than selling, real workshop, hands-on activities with women, but also with new generations.
Ilaria, I mean, there was this report from Deloitte showing actually that the watch industry was failing to make and market watches that women wanted to buy.
Yes.
I mean, do you have a percentage of sales target that you have towards women? How much do you sell to women now, and how much do you want to sell in 5 years?
We are in the range of 20%, pretty much like the market. We aim at mirroring the market reality. We don't want to be behind the market. We want to offer women the watches they want. The starting point has been not listening to women from the entire industry. I think there were so many stereotypes that we are trying to break. And also it's important that we stop separating the market between women watches and men watches, because this is not the way women think about the category, nor men, by the way.
Rolex, I know, is making big inroads with certified pre-owned programs. Will Audemars go the same way?
We are working on it as a service for clients. It's been a while. We have been working on this program, and now we will be ready in 2025.
I mean, there's also a lot of, you know, speculation, or at least talk about Vauchoir movement and the fact that there could be a consortium. This is a Swiss company that makes some of your movement parts. I mean, would you like to be involved? Does it make more sense for, you know, a watchmaker to have in charge of all the supply chain?
What matters to us is that we ensure that the industry is well served by our suppliers, and we create an ecosystem where we can be codependent. We have always worked in Switzerland with this system of établissage. That's how Audemars Piguet was born. We were at the center as a project manager of watches and working with different companies, families, sometimes expert in specific movements. We want to continue to have a healthy balance of partnership with external. At the same time, we need to start owning and mastering also the production of some elements, like ceramic, for example, is an important material for us that we start producing ourselves. But we believe in the balance of external and internal capabilities.
Ilaria, when you look at, I mean, every day we talk about geopolitics and the Trump tariffs. Does it impact a company like Audemars?
We don't see this impact after the election in the U.S. At this stage. U.S. continues being the biggest market, and the one actually that even in 2023 has posted the strongest growth. We have high demand. Also, given our relatively small size, we are not so affected by geopolitical fluctuations.
So what's your biggest problem solving? I mean, over the next 12 months, if you look at your 3 priorities.
My priority is, first of all, ensuring that we set the foundation. I set the foundation for this company to thrive and live for the next 150 years as an independent company, because we want to remain independent. And to do so, innovation and research is critical. We need to continue being ahead of the game. There is another pillar of the strategy, which is client centricity. You have seen it, women on one side, the new generation. They all come with a completely different approach to retail, to purchasing, but also to type of watch they want, dimension, complication. So we need to be listening, and then sustainability is becoming more and more a topic also in watchmaking, and we need to be ahead there.
When you look at the independence of the brand, again, the rumors about LVMH or other big companies taking an interest in Audemars, do you think the family would ever sell?
No. We are really committed to remain an independent company. It's part of the DNA of the company. It's thanks to this independence that we are able to do the wonderful timepieces we do, and being a focus in Le Valet des Joues, which is our cradle where we started. We want to guarantee also a certain continuity of way of doing business and timepieces. So we are committed to that.
You've been in charge for a year, and that means, of course, changes as you brought in new people. Are you halfway there? 90% there of the team that you want to have built?
90% there. The team is almost complete and ready to start. But I am also very glad to have a wonderful equipe of watchmakers in manufacturing, in other departments that are very solid. They have a wonderful team that supports me.
Do you have a favorite watch? I don't feel like I should. I don't know if it's like asking if you have a favorite child.
I have a favorite, and you shouldn't ask, because it's true. It's like children. Today I'm wearing a code, which is actually a watch that a model that I really, really love. But my favorite complication by far is the perpetual calendar.
Okay. Perfect. Thank you so much for joining us, Ilaria Resta, there with all the incredible movements that Audemars Piguet has to do to make some of these watches, the chief executive there of AP Watches. Coming up, Eurogroup finance ministers convene in Brussels today, with geopolitics, of course, dominating the agenda. Our exclusive conversation with the Portuguese finance minister, Joaquim Miranda, is next. This is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
The EU has welcomed the fall of the Assad regime, with Ursula von der Leyen calling the collapse a historic change. Meanwhile, Eurogroup finance ministers are meeting in Brussels with global political tensions at the forefront of discussions. Well, Oliver Crook joins us with the finance minister.
Yeah, Francine, it's a really interesting time to really be talking about budgets and the finance ministries, because it is what has brought down two of the largest governments within Europe, whether it's Germany or France, and even the sort of debate over in South Korea also had its source within the budget. So there's a lot of problems to deal with. So I'm very pleased to be joined by the finance minister of Portugal, Joaquim Miranda Sarmento. Thank you so much for taking the time.
Thank you.
So listen, I'd like to start on the issue of Syria because just of what happened over the weekend. I know it's not directly in your sort of control, but are you concerned that this might mean a more sort of refugee influx? You also potentially could have more coming from Ukraine, and that sort of finance ministers need to potentially budget a little bit more money to deal with that problem at a time of fiscal strain.
Well, first of all, we have to be happy with the overthrow of a dictatorship regime like the one in Syria. So let's wait to see how this new regime works. Let's see how it is able to bring back Syrian refugees. We are expecting to see what will happen. Obviously, if more refugees come to Europe, that will pose a new challenge like it happened a few years ago. But for now, we're basically waiting and see what the next weeks and months will bring us on that area.
And a lot of the focus for the investor community here in Europe has been on France over the last couple of weeks. This has, of course, has been crossing your desk, I imagine, as well. How concerned are you over the prospect of potential spillover? Because traditionally in Europe, it has been the periphery that maybe is a cause of issues. Now it's the core that is threatening potentially the periphery.
Well, I don't think there's any danger of spillover. The core of the European Union and the core of the Eurozone is very strong. The European Central Bank has now a different mandate that it had in 2009-10 when the sovereign debt crisis began. We also have the European Stability Mechanism, and all of us have learned substantially lessons about that other period. France obviously has a government problem, a problem of governability.
Yeah.
It has a fiscal situation that is very demanding, with the deficit probably above 6% of GDP and public debt increasing. That obviously creates pressure in the Eurozone, creates pressure in the country itself. I'm confident that the French will be able to find a political solution that could bring stability to that country, that could bring the reforms they need, not just for fiscal consolidation, but also to boost productivity and economic growth.
Yeah.
But the Eurozone is very strong. We have the mechanism, we have the instruments, we have the institutions, and I think there is no substantial danger over the Eurozone as a whole.
Yeah, and we have so many topics to deal with. Another one I'd like to deal with is the topic of trade. We had this sort of signing preliminary of Mercosur over on Friday. Is Portugal, broadly speaking, supportive of this trade agreement with Latin America? And what do you think needs to change? Are you concerned about it being blocked by, say, France?
Well, we're very optimistic about this agreement. We have strong ties with South America, first of all with Brazil, who speaks Portuguese and has been a Portuguese colony for centuries before becoming independent. We also have strong ties with all the rest of the Latin American countries. This agreement, every trade agreement, when it's based on a fair trade, is positive for all countries. It will improve the conditions of consumers, that will be able to have access to more products, and more competition always bring better benefits to consumers. Firms will have to adapt. Firms will have opportunities and risks, like every agreement. But at the end of the day, if we're able to assure that this is a fair trade for all parts, all parts will benefit from it.
I think that the concern, though, as I'm sure you'll be familiar, is that something like to what happened with China on industrial could happen with agriculture for the Europeans, where it's a place that has lower regulatory standards, lower sort of costs of labor and those sorts of things could then flood the market. Do you think that there's going to be a satisfactory resolution to that? Do you think that France and potentially Italy, Poland could block the deal?
Well, economic theory shows that when these agreements are based on a fair trade, everyone benefits. Obviously, regulations and rules are very important. Everyone from South America or other parts of the globe who wants to sell in Europe will have to accept our regulations and our rules and our standards, and the same will happen with European firms selling to other parts of the globe. At the end, I think it will benefit, like all trade agreements before, have benefit generally population.
And in terms of, because there's this sort of globalizing aspect of this trade deal, there's also the deglobalizing aspect, potentially, of Donald Trump and the possible imposition of tariffs into Europe. What is the conversation you'll be having with finance ministers about what Trump's impact could be on the European economy?
Well, from my point of view, again, our talks with U.S. should be on how can we regulate trade, how can we not impose tariffs that will hurt consumers, especially the ones with less income. Those are the ones that will suffer more because they will have to buy products with a higher price and probably lower quality. So the discussion with U.S. has to be how can we make the trade agreements more robust, how can we make them more fair, and how can we complement what our two different economies need. We have problems in terms of energy, in terms of some technological products, agriculture, but U.S. also has some needs. So I think at the end, it will always be better to cooperate than to have unilateral decisions on tariffs.
And one of the big questions before European finance ministers right now is the question of defense, and there's a lot of debate about how to get that money mobilized to industry in order to build up industry within Europe. Are you in favor of potentially collective debt, joint debt, in an effort to do that, to front-load some of those investments?
Well, first of all, countries need to robust their defense systems and, in the medium term, to reach the NATO target of 2% of GDP spending being on defense. But if European as a whole needs to increase their defense expanding especially because of Ukraine, whatever happens next year in the Ukraine, and we all hope that the war could end as soon as possible, a strong increase in the need for financing, for investing and spending on defense. We'll have to have a European joint solution in terms of coordination and in terms of financing. So we have also learned a lot of lessons from the pandemics, and those lessons are useful for the new risks and the new challenges that we face ahead, especially the ones related with defense.
And very quickly, when will Portugal hit its 2% target of NATO?
We have a commitment for 2029.
Okay.
We hope to fulfill that commitment, and if possible, even to move faster through that limit.
Well, Joaquim Miranda-Sorrento, thank you so much for your time today. Greatly appreciate it. Francine, I'll send it back to you. Dealing with many of the issues that the Europeans are facing now, from defense to possible migrant flows, and of course, that stability at the very core of Europe and France.
Ollie, thanks so much. Oliver Crook there with a fantastic conversation in Brussels with Portugal's finance minister. Plenty more to come, and this is Bloomberg.
our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
I can't guarantee anything. I can't guarantee tomorrow. But I can say that if you look at just pre-COVID, we had the greatest economy in the history of our country. And I had a lot of tariffs on a lot of different countries, but in particular China. We took in hundreds of billions of dollars, and we had no inflation.
President-elect Donald Trump there speaking about U.S. tariffs on NBC's Meet the Press with Christine Walker. Now, Donald Trump says on his first day in office, he will pardon the rioters involved in the attack on the U.S. Capitol on January 6, 2021. Well, Trump confirms the news in an interview with NBC's Meet the Press, his first network TV interview since his election victory. Now, Trump's comments follow President Joe Biden's decision to offer a pardon to his son, Hunter Biden. And New York police have released new images of the suspected gunman in the killing of health insurance executive Brian Thompson, including one of him in a taxi that he used after the shooting. Investigators say the suspect hailed the cab on the Upper West Side of Manhattan soon after the attack, heading to a bus station to leave the city. Now, here's what to watch out for this week. We have the Eurogroup finance ministers today, Tuesday. Tomorrow, I'm really looking forward to our special conference on Women, Money, and Power conference. So we'll be speaking to Jane Fraser, Citigroup, Jenny Johnson of Franklin Templeton, and Anna Butin. This is Bloomberg.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry, meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. Almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
On the stock to a new street high. In just a few moments, we'll catch up with Andrew Sheets from Morgan Stanley, Terry Wiseman of Macquarie join me a little bit later on this morning. So foreign exchange and risk very much in focus. I want to show you what's happening with dollar yuan. The dollar, we know, has been on a tear higher, and nowhere is that more noticeable than perhaps in the yuan, rallying by nearly 2.5%. In other words, the yuan down. We have these headlines in the past 24 hours from China that the Politburo is going to shift its policy for the first time since 2011. The language, moderately loose versus prudent. ANZ are saying this is an unprecedented move, a more proactive policy stance, monetary policy, along with fiscal policy, and this is about stabilizing, getting out the national team, stabilizing the property market and the stock markets. What does that do to animal spirits of risk? Morgan Stanley's Andrew Sheets writes the following: global credit is on borrowed time. Strong current conditions linger into the first half of next year, keeping spreads tight. Expect a weaker second half as animal spirits grow and economic outcomes widen. Good morning, Andrew, to you. I just want to deal with the context of animal spirits. There's no doubt about it. The PBOC this morning, or over the past 24 hours, they're going into what I would call a very active defense play. What does that do to the animal spirits of risk? Let's just broaden the topic for a moment.
Thanks. Good morning. It's great to be here with you. So in our view, the animal spirits for the moment, we think will be more concentrated in developed markets and markets like the U.S. Our economists remain somewhat below consensus on growth in China. And while more stimulus is potentially helpful, in our view, what we will need to see change the situation in a larger way is something that really impacts demand to a larger extent than what we've seen so far. So let's see what we get from the policy easing side, but we think it might take much larger shifts in the social safety net, in spending, boosting demand, rather than subsidizing supply, that those types of things would have the biggest impact on our growth forecasts. Whereas, rate cuts, they help at the margin, but they're potentially more likely to continue to keep the currency soft, which is in line with our forecast. So, for now, when we think about those animal spirits, we're thinking about M&A, we're thinking about corporate confidence, we're thinking about kind of investor confidence rising even further, but that might be more of a U.S. story for the time being.
Well, let's just talk about that, because you very clearly divide next year into two halves. Maybe not as precisely as that, but you say there's probably six more months left in terms of this euphoric momentum in the market. Then we morph to a much more volatile regime. Is that because we begin to understand more nuances and detail of the Trump policies?
Yeah, that's a very big part of it. So the way that our public policy team at Morgan Stanley is thinking about these policy changes is fast announcement, but slower implementation. And so, we think early on we'll see announcements around tariffs, we'll see announcements around immigration, but the actual implementation of those things, the implementation that would potentially drive, say, more inflation in the case of tariffs, that will happen slower and later. And so what you end up with is you have a pretty good U.S. economy right now. That is continuing to linger and continuing to have momentum into the first half of next year. So the data remains good. You continue to have strong growth, moderating inflation. The Fed is still cutting. The ECB is still cutting. All of that, I'd say, quite constructive narrative from this year, from 2024, really lingers into 2025. Now, the challenge is that by the time you get to the middle of the year, more of the impact of those policies starts to become apparent. We start to see the Fed pausing as inflation starts to be a little bit stickier, and they've cut rates by that point all the way down to 3 5/8%. And we also think at that point maybe kind of corporate animal spirits have accelerated further and start to be a little bit less credit friendly than they've been in the past.
In terms of the narrative out there in the market, there is the view that Scott Bessent is going to be the rational, the guardrail, perhaps even a little bit of fiscal probity in the room. Do you believe that? Or if I look at the sequence of events so far, it's still very much President-elect Donald Trump is setting that agenda, and everybody else in this cabinet needs to come to heel quite quickly.
Yeah, so I actually think I think it's a great question because there's a lot we don't know, and in some ways this is the easy part. This is dessert first in some ways, where everything is still possible. We haven't had the full cabinet announced. We haven't seen the actual policy proposals. This is a point where the market is free to dream and imagine that their preferred version of the next administration will be the version that we get, and that's a powerful force. Optimism, the dream is an incredibly powerful force in markets. Now, as you get into January, we hit a first waypoint of that. We'll start to see more concrete proposals, and certainly when we are out talking with investors, there are a very wide range of expectations around things like tariffs that will start to narrow. And then again, I think as we get further into the year, you'll see that range of outcomes or that uncertainty narrow further as we know more of what we'll get. But specifically on fiscal policy, I think that's the area where we think actually the change will be the smallest. That Republicans have a very small majority in the House of Representatives. That's going to make it, we think, quite hard to enact larger changes of policy. And because the Tax Cut and Jobs Act is expiring, there's a lot of work that needs to be done in figuring out how you extend that. So, our view is that on the fiscal side, even though I think there's initially been a lot of excitement around a Republican sweep, we think fiscal change is ultimately going to come in a little bit smaller. And that's a big reason why at Morgan Stanley, we think bond yields are going to move lower next year, not higher.
It's interesting because a lot of people are sort of saying to us, it is about the sequencing. They will go hard, heavy, and early in a huge demand on tax cuts because that majority dissipates over time. And that sort of chimes for you. So again, this gives us the alpha in credit and treasuries in the first 6-7 months.
Yeah, that's very much how we're thinking about it. That kind of the first half of the year is the easier part. That's when the data is still holding up, disinflation is still in train, rates are coming down, the Fed is still cutting, the ECB is still cutting. And where I think, we think you're still going to see these negotiations where the uncertainty in some ways is to the benefit of the market. Investors can still imagine that uncertainty will break in a way that they like. And then indeed, I think as you go further into the year, you start to hit more of the potential downsides of negative supply shocks, be they tariffs or immigration. But again, it's a great point on fiscal uncertainty. There are a lot of different ways that this can break. Our view is that narrow majority is going to delay it. There are other views out in the market that narrow majority will lead to a different outcome. And again, the clock starts to tick on the midterms, before you know it.
You're back on the hustings again, Andrew, before we've even had the inauguration. But I do love your line. It's dessert first, and we dare to dream for 2025. Andrew, thank you very much. Andrew Sheets of Morgan Stanley. Other stories training on your Bloomberg terminal this Monday morning. This is what we've got. South Korean President Yoon escapes impeachment. The Justice Ministry has banned him from traveling overseas as a result of the ongoing investigations into his brief declaration of martial law. Police are reportedly also considering whether to put Yoon under emergency arrest. UBS CEO Sergio Motti says the incoming U.S. administration's potential move to raise tariffs on trading partners could increase risks next year. He spoke to Bloomberg earlier.
The acceleration of geopolitical events coupled with potential escalations on the macroeconomic front, tariff, protectionism, it's definitely something that has to be watched. On the other end, we still see consumers and the economy quite resilient despite all these challenges.
More cases of mysterious flu-like illness labeled Disease X were reported in the Democratic Republic of Congo. Now, over 400 cases of the unidentified illnesses marked by fever, headache, cough, runny nose, and body aches have been reported since late October. The World Health Organization has dispatched a rapid response team to help investigate. Coming up, Assad's government toppled the stunning turn of events that ended the president's 13-year rule in Syria. That's next on Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Get your Fixed Income Fix, half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
We're clear-eyed about the fact that ISIS will try to take advantage of any vacuum to reestablish its capabilities, to create a safe haven. We will not let that happen.
President Biden speaking after President Assad's fall in Syria, leading to chaos as people took to the streets in Damascus to celebrate his demise. Joining me now from Istanbul is Bloomberg's Honor and Honor. The president saying this is a moment of risk and great uncertainty. The United States, we know, attacking some ISIS targets. But in terms of who is in control, what is the scale of the political vacuum on the ground in Syria right now? Good morning.
Good morning. The political vacuum is definitely there. The Islamist rebels who led much of the advance over the last 10 days are now in charge in Damascus, the capital, as well as some other large cities such as Aleppo, Hamas and Hama. But outside there, we're seeing many groups trying to carve out larger areas of influence and lock in gains made during the last 10 days. You have Turkish-backed forces in the northwest, US-backed Kurdish forces in the northeast, as well as some other various US-backed forces in the south of the country. And as we've seen overnight, there are still ISIS remnants in parts of central Syria where there have been heavy US bombings against their positions. The next big thing to watch in terms of the political vacuum and what's happening in Syria is going to be in Damascus, where we are waiting to see a political transition. Both the head of HTS, the Islamist group that basically drove the last 10 days advance on the capital, and the prime minister, the last prime minister appointed by outgoing President Assad, have said that they want to work together on an orderly and swift political transition. But has there been such a transition yet? No, and there are no indications as to when it will.
And, you know, and there's the big risk is, of course, that Syria goes the way of Libya. Factions, various religious factions divide the country. We've heard President Biden's scenario for Syria, but the incoming president, President Trump, he's been on Truth Social and he's making it very clear, this is not our fight.
Yeah, and President-elect Donald Trump's those comments over the weekend kind of left whatever Biden has to say a bit of a moot point. His position from the get-go has been that the U.S. troops should not be in Syria, and that's something that he tried to engineer their removal back in 2018 and 19, although unsuccessfully. But right now, yes, the U.S. Main U.S. policy objective in Syria remains the same, which is to make sure that ISIS doesn't come back in a post-Assad era. Now, but there is a major flashpoint, possible flashpoint to watch for as the U.S. tries to keep that objective, and that is the fact that the U.S. so far has been using the Kurdish forces, the PYD or SDF, whatever you want to call it, as its main instrument to achieve that. Now, if the U.S. wants to come out of Syria, obviously there's going to be possibly a big clash between those Kurdish forces and Turkey in the north, which also wants to create its own sphere of influence and expand it and lock in gains and basically push the Kurds away from its borders. And that's something that U.S. Senator for South Carolina, Lindsey Graham, already warned against as a possible flashpoint in U.S. policy, foreign policy going forward this morning.
Honor, thank you very much for the very latest on Syria, Honor, and in Istanbul. To the U.S., President-elect Donald Trump made his return to the world stage, meeting with the French President Emmanuel Macron and Ukraine's Volodymyr Zelensky. That was in Paris on Saturday. He was in the city for the reopening of Notre Dame, the cathedral. Officials close to Macron and Zelensky said the meeting was positive. Bloomberg's Kevin Whitelaw joins us. Obviously, this was a significant political opportunity for Macron to show a very big presence on the global stage, given his domestic situation. But it's an interesting imagery of President-elect Macron and Zelensky. This just shows us perhaps the speed with which we will move towards some kind of discussion between Russia and the rest of the world.
Well, that's right. It shows that, once again, Donald Trump is not waiting for Inauguration Day to begin, trying to make his impact felt, but also just be seen acting on the world stage. And so we don't really have a good sense of what came out of those meetings. It does seem to have been very preliminary conversations. But, in the aftermath, Donald Trump put out a post about, something about, 400,000 losses in the Ukrainian war, prompting Zelensky to have to come back and provide a rare disclosure of at least their version of the Ukrainian death toll for soldiers that have been killed, which is 43,000. Now, it's possible Trump was actually referring to killed and wounded. It's a little unclear exactly what was happening, but you're already seeing a little bit of that disruptive effect going on as Donald Trump is out there making pronouncements, people understanding that everyone's listening, and now everyone else having to react to it even before he's in the White House.
Well, it is about setting political agenda before he even sits into the Oval Office. Now, look, on Sunday, Trump gave another TV interview. This time it was with Meet the Press with Christian Welker. The conversation was around the Fed chair. Let's just take a listen.
I don't see it, but I think if I told him to, he would. But if I asked him to, he probably wouldn't. But if I told him to, he would.
You don't have plans to do that right now?
No, I don't.
The nuances in the word "if I asked him" or "if I told him." I mean, again, there's nothing spectacularly new in this discussion, but it will help perhaps settle some people's nerves that this is not a road that he's immediately traveling. We can talk about whether there's a shadow chair or not.
Well, that's right. I mean, we are, I think, going to have this willy won't he conversation about Trump and in terms of what he's going to do with the Fed chairman for a while. And I think, for Trump, there's some value he sees in preserving some of that ambiguity, perhaps giving him some leverage over it. But we do know that Trump is going to measure his success in part, at least, on sort of how the stock market's doing. And for now, he at least wants to try to, keep that market reasonably soothed and reassured. So, I think keeping Powell in the role for now is good. But, in those remarks, you did still hear a little bit of that, notion reminding everyone that he could still remove him if he decided he wanted to.
Absolutely. The difference between if I ask him or if I tell him. I like it. Preserving the ambiguity. It's the power of the ambiguity. Kevin, thank you very much. Kevin Whitelaw there with the very latest on President-elect moves over the weekend. Let me just show you what's going on with the commodity market. You've had this quite dramatic pivot from the Politburo in China, talking about a really quite dramatic move to a modestly loose versus prudent policy. So what you've got here is crude bid up, more so on the China story, really, rather than the political vacuum that's left behind in Syria. Saudi Arabia cutting their oil prices by 80 cents over the weekend. Copper and iron ore, again, it depends how unprecedented this policy shift will be from China, and you can certainly see that. And of course, Citi on Friday had just downgraded their copper outlook to 8,750 from 10,250. But at the moment, commodities seem to like what they possibly will hear from the Politburo and the authorities in China. Coming up, a $765 million decision where Juan Soto is reportedly playing next season. You get the details right here on Bloomberg Brief. Good morning.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but you can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, anywhere. Go.
From the world of politics to the world of business, Joe Matthew and Keely Lyons deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bloomberg Brief this Monday morning. I'm Manus Crenny in New York. Let's get you up to speed with your front pages. This is what is making headlines around the world. First up, the Journal. Omnicom is in advanced talks to buy Interpublic, I should say. The deal would create the world's largest advertising firm. It would likely have a value for Interpublic between $13 and $14 billion. That excludes the debt. Bloomberg leads with U.S. Bitcoin ETFs, nearly $10 billion piling in since the election. The total assets of these funds have now reached approximately $113 billion. President-elect Trump's embrace of the crypto market has produced, quite literally, a boom all the way around in that space. And ESPN reporting that Juan Soto has decided to sign with the New York Mets in a record-breaking contract. The 26-year-old has signed a deal worth $716 million over 15 years and no deferred money. He played outfield for the New York Yankees during the 2024 season. Good luck to him, the contract, and the cash. Talking of dollars, let me just show you what's going on in the FX market. Terry Wiseman joins me very shortly. The dollar starts very little bit of a back foot here. I can tell you the optimism among the hedge fund world out there. They've cut their shorts by 50%. The hedgies have boosted their longs in the dollar by 10%. So they see another pro-dollar narrative in the next 6 months. Aussie dollar, I think, is ground zero for the highest beta currency reaction to the policy shifts from the Politburo, which are going to move to, in their language, a more proactive fiscal policy versus a prudent stance. You have a little bit of a strengthening in the yuan, but ground zero for reaction function to what the Chinese do. It is those exporters of iron ore, the Aussies.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From our global headquarters in New York, you're welcome to Bloomberg Great Fund Managed Training. Let's set your agenda. A policy pivot for China, a more proactive stance, the biggest shift since 2011. Middle East on edge, US strikes dozens of ISIS targets as Syrian president flees to Moscow. And President-elect Trump says he's been in touch with China's Xi in his latest interview. Good morning to you. We're knocking on the door of a new week when CPI will define the trajectory and the next move from the Fed. You're flat. I mean, you can't get any more excited by that. But you've had 57 record closing highs in the S&P 500 so far this year. Swaps say 80-90% probability of a December rate cut. There's a cracking new note out from Oppenheimer's Stoltzfus, basically saying 7,100 by the end of 2025. There's a resilience in this equity market, a broadening, and that will surmount the wall of worry. And one of the things that will surmount the wall of worry is the watershed moment in productivity from AI. Roll it over, have a look at the bond market. Short end of the curve dropped on Friday. This week it will be about CPI, 3% on the core year on year and plus 0.3%. There's no reason to pause is the consensus. The unemployment rate ticks up to 4.2%. That will validate the Fed cutting rates is this consensus in my inbox this morning. But first up, the top markets headline of the day, China's Politburo announcing it will embrace a moderately loose strategy next year. For more, let's get to Ven Ram. He joins me. Ven, moderately loose. This is, some would say, the most pivotal shift that they've seen in language versus 2011. Moderately loose versus prudent. What does moderately loose, in your opinion, equate to in monetary policy and fiscal policy? Good morning.
Morning, Manus. I think that moderately loose, I would interpret it to mean a further weakening of the yuan. This year, if you've seen the yuan fixing and the yuan spot, they haven't allowed it to weaken very much. We are talking about 1.5%, 2%. But next year, I think that would mean a lot more, say 3 to 4%. They need that kind of adjustment because if you look at China's economy, they've got 3 pillars of growth. One is property markets, which is in the doldrums. And then consumption, which of course is weak because China's consumers are traditionally savers, not spenders. The third big pillar of the economy is exports. And that's where they can leverage the most. And that's the sector that they need to exploit. And in order to push up exports, in all the friendshoring and all that has taken place since 2020, what they need is a weaker yuan. And that's what will get them the export growth that they need, which is why I think that today's acknowledgement is a big confession, and I think it's a step in the right direction.
Okay, some would say it's a hellishly defensive play by the Politburo ahead of what could come down on them in terms of tariffs in 2025. Ven, thank you very much, Ven Ram, on the very latest policy adjustments from the Politburo in China. My guest this morning is Terry Wiseman, Global FX Rates and Strategist at Macquarie Group. Great timing.
Absolutely.
We'll book you in on the key day. This is an acknowledgement, Ven says, a confession. I put it to you, this is just classic defensive play ahead of the risk of tariffs from the United States of America 2025.
I agree. If these tariffs do happen against China, and if they're as aggressive as President-elect Trump has made them out to be, I think we will see dollar yuan rise again, and I think it will be engineered by the PBOC and the policymakers in China. One has to keep in mind that in 2018, this was the play, right? We saw dollar yuan at around 6.2, 6.3 in late 2017. It then rose to above 7 by the end of the Trump administration. And then when Biden came in, dollar yuan fell again on the premise that we didn't have to worry as much about an anti-China policy coming out of the U.S. So the yuan does move with the administrations and who's in charge in the U.S. And I suspect what the Politburo is doing is simply preparing for the prospect of tariffs.
How much weakness are they prepared to have? I mean, if you think it moved to 720 in 2018, but we're at 727 at the moment. So they perhaps just don't have the same latitude to let it off the leash as much, do they?
That's true. There are some considerations that have to do with things apart from trade competitiveness. Certainly the Politburo and the PBOC and the other policymakers do not want to engender capital flight from China by virtue of the public and the investor base understanding that there's going to be a very large devaluation or depreciation of the yuan. I think what they need to do is to manage the process. And the way to do this is to use the tools they have at their disposal, including the daily fix. We do think that dollar yuan will go higher next year as we see these tariffs start to be applied. We have a target of 7.5, at least as a first stop for where dollar yuan will go next year.
If it breaks 7.5, do you risk capital flight briefly before we move on?
At some level, you do risk capital flight, but it will not be just about where the dollar yuan is at the time that the capital flight ensues. I think other considerations will be relevant here. How well is the economy doing? How aggressive are the policies? Is the commercial relationship between the U.S. and China breaking down further through non-tariff barriers, for example? I think all of these things are a consideration for investors when they decide from onshore players if they're going to keep their money offshore.
Yeah, look, part of the argument would be is a reasonable amount of capital has already shifted. There's an interesting piece of global theater over the weekend. Macron, Zelensky, and President-elect Trump in Paris. And this sort of, you make this point, which is stand back from this and look at it from the point of view. Trudeau's already got on the plane. Sheinbaum is pushing back quite aggressively. But what you have here is Europe with a security need to do a Faustian bargain over trade. They have much more at play to do a trade deal quicker and earlier with Donald Trump, don't they?
Yes, and I think that's an artifact of the weakness of the European economy, but we can see where the contours of a grand compromise will come, right? It will become from Europe acceding to peace in the Russia-Ukraine situation, or at least a ceasefire. It'll come by way of the Europeans agreeing to buy more natural gas from the U.S. It'll come by way of the Europeans agreeing to step up defense expenditures, as President-elect Trump has asked them to do. Those would be all parts of, all elements, if you will, of a grand compromise that we could see happening or taking shape in 2025. Of course, if this were all to happen, it wouldn't be terrible for the euro, but certainly the premise that the Europeans are going to be buying more from the U.S. would not flatter the current account balances, the external balances of the euro area. You would see their trade surplus come down, their current account surplus come down a little bit.
That grand bargain, if I look at a euro-dollar chart, we're 105.81. 2 weeks ago, if you were sitting in the chair 2 weeks ago, we'd probably been talking to you about parity. The world has moved on from that. I just wonder, this is not a do-whatever-it-takes moment for the euro. So is that grand bargain now being priced in to put a kind of floor in the euro at the moment?
So it's not a panic situation in the sense that I don't think that the ECB needs to cut rates even more aggressively than they've signaled in the short term. from a perspective of monetary policy, I think they're doing everything they should be doing. They've signaled that to the public. I do think, however, that from a structural perspective, Europe hasn't done enough and they need to do more. Reduce the dependence of industry on government. Make the labor market more flexible. Reduce the amount of energy dependency on the East and the Mideast. I mean, there are things structurally that Europe needs to do to promote innovation, to promote productivity growth. This was the essence, effectively, of Mario Draghi's report. And in that respect, there is a lot more they can do, and they need to get on with doing it.
And that's where that spread and that differential just lives for the next 3 to 5 years in terms of productivity between the United States of America and Europe. Tell me this, one of the best lines I read over the weekend was this: Donald Trump wants a global dollar, but he doesn't want one that shuts U.S. exporters out of the markets. I was thinking, what is a global dollar? What is a tolerated dollar for Besant and Trump? Because they have very different ideas about what the dollar should be, don't they?
I certainly think that over the last few weeks, we have seen this coming administration adopt a strong dollar policy. I know that sounds strange because Trump 1.0 was a weak dollar policy and initiatives around that, but Trump 2.0 is going to be a strong dollar policy, certainly in the sense that they do not want to see a weak dollar promote inflation in the U.S. Keep in mind, I think that President-elect Trump knows very well that what killed the Biden administration, effectively reduced their approval in the electorate's eye, was inflation. He certainly would not want to punish himself with inflation in the U.S. in the next 4 years. And one aspect of ensuring that inflation does not recur in the U.S. is to have a strong dollar. It doesn't mean that the U.S. will intervene in the FX markets, but I think it really means at this point that at the very least the U.S. has to ensure that its allies and also its non-allies do not dump the dollar as a reserve currency.
Briefly before we go, what have you learned between Trudeau visiting, Sheinbaum on the tape, and Macron, standing side by side? What have we learned about what we're going to get in 2025, briefly?
I think we're going to get concessions. I think from the U.S.'s trading partners, with the possible exception of China, because this is a strategic competitive situation and not just an economic situation, we're going to get concessions. We're going to get concessions from Mexico with regard to the border. We're going to get concessions with Canada with regard to the border, if that's what Trump wants. We're going to get concessions from the Europeans with regard to purchasing more U.S. goods.
And as you say, the tariff agenda is much more likely to stick on China than it is on Europe or Canada. Terry, thank you so much for being with us.
My
Terry
pleasure,
Wiseman, reacting immediately to the Politburo's news over the weekend on China policy. Coming up, President-elect Trump says he has no plans to remove Fed Chair Powell from his post. More on the latest interview. That's next on Bloomberg. Good morning from New York.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
In case you missed it, on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared. And China, psychologically speaking, is much more prepared in dealing with him again.
Probably our
fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss the China Show live every weekday.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
I don't see it, but I think if I told him to, he would. But if I asked him to, he probably wouldn't. But if I told him to, he would.
You don't have plans to do that right now?
No, I don't.
That was President Donald Trump giving his first TV interview after the elections. He spoke to Meet the Press with Christian Welker on Sunday. Joining me now is Meghan Crane of Bloomberg Government. Meghan, good to see you this morning. These comments indicate question about Fed Chair Powell's future settled. I like what one of our colleagues said a little bit earlier, which was it still preserves a certain amount of ambiguity because there's a distance between if I ask you to go or whether I tell you to go.
Yeah, good morning. So I thought these comments were really interesting. They are the first interview from the president-elect since the election. Lots to sort of chew on there. His things about Powell were kind of classic Trump in the fact that he leaves open the possibility to change his mind. So that is very classic Donald Trump. Answer to a direct question is probably not or not right now. So it's unclear. He doesn't plan to do it right now is sort of is all we can sort of take from that, right? It doesn't really take us to the end of Powell's term in any way.
No, it doesn't. And certainly we also got an incremental shift forward. We understand now President-elect Donald Trump has spoken to the Chinese leader Xi Jinping. He has made it very clear about border security with Mexico, border security with Canada, and here it is about fentanyl. It is one of the underlying issues that he's been going after with China. Again, it's about what comes next. You've seen a policy shift from the Politburo, but this is the start of a much bigger conversation between the Trump White House elect and Xi Jinping.
Yeah, it was very interesting weekend for the president-elect. A lot of foreign policy, which is unusual for a president-elect, although he is, of course, an unusual winner of an election coming into a second term. On China, he only confirmed that there were communications, and the Chinese sort of agreed with that, confirmed that as well. What they spoke about is unclear. Sort of what that means going forward is unclear. The two men last met in 2019. It's just a new. I think it's really interesting in the sort of pre-tariffs age. Trump talking about tariffs from 10% to 60% on Chinese goods. China is really in a position where they just have to talk to him. They have to figure out where he's going to come up, what he's going to come up with as far as a policy towards them in the end. Again, Trump leaves open the possibilities of changing his mind at the last minute. That's a pretty standard way of presenting ideas from him. So, how that manifests is really going to be interesting to watch.
Okay, Meghan, thank you very much. Meghan Crane from Bloomberg News. To the Middle East, U.S. is striking dozens of ISIS targets in central Syria. This is after President al-Assad's government falls amid a stunning territorial advance by the opposition groups over the past few days. Let's take a listen to what President Biden had to say.
We're clear-eyed about the fact that ISIS will try to take advantage of any vacuum to reestablish its capabilities and to create a safe haven. We will not let that happen.
Let's get to Abu Dhabi. Jumana Busachi joins me now. Jumana, President Biden says this is a moment of risk and uncertainty, but the U.S. has taken some quite aggressive action, we could say, in striking some key ISIS targets in the past 24 hours.
Yeah, well, let me just bring it back to, of course, I am live from Abu Dhabi Finance Week, and when you think about the objectives of the region, the financial objectives, and it's a region that you've covered for a very long time, key to that is stability, geopolitical stability. It's something that the UAE and Saudi Arabia have been talking about consistently over the course of the last year, and the perception from the region is what has happened is a massive seismic event. This is effectively the end of more than 4 decades of rule for Assad, the Assad family, the father and son. They had pursued a very brutal, oppressive regime. There was no room for political dissidents. And so there's loads of mixed emotions right now. Within Syria, many scenes of jubilation. People are happy that the regime is gone, but lots of questions still about what is to follow. And we know that the rebel group who was leading the charge, HTS as is known, Hayat Tahrir al-Sham, has been led by a figure who in the past had affiliations with Al-Qaeda. He's been trying to moderate his stance in recent years and in recent interviews. He's been trying to suggest that they are more moderate figures than what their backgrounds would suggest. But still, lots of questions about what the transition is going to look like, who actually is going to govern Syria, who is going to fill the vacuum that was filled by the Assad regime over the last 4 decades or so. And so you think of it from the regional perspective, and yes, it is a moment of change, but it also is a moment of deep instability.
Well, as I said, the reaction function from the Biden administration has been really to target those pockets of ISIS on the ground in Syria. The risk is that Syria goes the way of Libya and divides upon religious and sectarian grounds. But there is a new incoming president, Donald Trump, and his view on truth social is this is not our fight. So this is a very, very stark difference.
Yeah, we've spoken to a lot of analysts this morning, and they say President Trump may say that it's not his fight, but unfortunately, it will have to be part on the U.S.'s radar, namely not just because of those 900 troops that are stationed mostly in the northeastern part of the country, but because Syria has for so long been a melting pot and a center where all of these fault lines that you speak about around the world have a presence. You, in the past, had the Iranian and Iranian proxies alongside Russia come in to support President Assad at the time of the Arab Spring. The fact that the regime fell so quickly this time is probably reflective of the fact that, number one, Iran and its proxies around the region are operating in a diminished capacity. Number two, Russia is diverted, but then also tells you that if you want to think big picture about the direction of travel for the region as a whole and this geopolitical stability that I referenced in the first segment, then you will have to think about the trajectory of Syria simply because there are so many other actors stationed there, and it is going to be integral to the future of the Middle East as a whole.
Well, certainly think of the periphery to Turkey and to Israel. Israel, with Assad gone from Damascus, you know, Iran no longer perhaps there to reinforce the Hezbollah story. So there are a number of nuances there. Jemana, great reporting. Great work at Abu Dhabi Finance Week with Jemana Basecci. Quick snapshot of commodities. Commodities are moving much more aggressively on the news flow from China than they are from the disruption and the vacuum in the Middle East. China moving to a moderately loose policy versus a prudent policy. So you're seeing oil and iron ore really pacing ahead as the Chinese promise to deal with the housing market and indeed infuse a new lease of life to the Chinese economy. A little bit earlier, Jemana caught up with Sergio Motti, the UBS CEO, at Abu Dhabi Finance Week. Let's take a listen.
All these geopolitical events haven't really triggered any more chain events and consequences, also in financial markets. So that's positive. So I think that but one cannot be complacent. You know, the acceleration of geopolitical events coupled with potential escalations on the macroeconomic front, tariff, protectionism, you know, it's definitely something that has to be watched. On the other end, we still see consumers and the economy quite resilient despite all these challenges. So, but, you know, we have to watch carefully those developments and not to be complacent.
How do you see the outlook for the global economy next year? It feels as though you're going to get like pockets of growth, the U.S. perhaps one of them, Europe less so. How do you square it all together?
Well, you know, if you look at the fact that rates may come off, inflation seems to be under control for the time being. and potential deregulation in the U.S., fostering M&A activity, that could be beneficial for the economy and for markets. On the other end, as we mentioned, tariff may create some potential inflationary consequences. So, it's still very uncertain. I do believe that next year we're going to still continue to see a lot of volatility in financial markets, and therefore want us to be very diversified and look at opportunities to deploy cash in a diversified manner.
What would you say the risk-taking appetite is for UBS clients right now?
Well, risk appetite is balanced. I do believe that we see for clients opportunities to redeploy cash as we expect rates to come off. But I would say that not a lot of risk appetite in this environment. Balanced and diversification is key.
UBS CEO Sergio Motto there, speaking exclusively to Bloomberg's Jimena Besetchi in Abu Dhabi at the Finance Week. Coming up in the show, set you up for your trading week. It is CPI, more inflation data could define the trajectory for the Fed. The ECB decision up as well, right here on Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Up to the minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Let's set you up for your week. It's all about inflation. CPI hits the tape on Wednesday, plus PPI on Thursday, and another round of jobless claims. Thursday, it is the ECB and their rate decision. We've just had a conversation with Terry Wiseman. He says, look, it's very unlikely that they're going to have to go for a much larger cut. Stocks to watch, Palantir gaining after announcing it plans to team up with weapons maker Anduril to speed adoption of AI in defense. Tesla also a little bit stronger this morning, up 1.2%, continuing as Bank of America raised the target there. Oracle earnings after the market closed today. The report is for rising sales on the cloud product as well.
Konstantin Stefana. I am the owner. I have family office and the company called Company I Limited. I also have a live streaming channel for startups. It's SG Trader. So anybody, we let startups to pitch investment community on our channel. I give them 3-minute pitch. We publish their video on our channel, and everybody who is interested, please welcome to send me your video, and I will publish. I will roll for almost a month your video for all financial community. The channel is live. It's streaming live 5 days a week from morning to night.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Technology.
This is the Asia Trade.
You're watching The Close. Welcome to Balance of Power.
This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Profitability of U.S. companies is unlike anything else that's available in the global equity market.
I'm not necessarily saying we're sitting at like 2000 dot-com bubble type overvaluation, but we look a little bit over our skis.
There will be a lot of unpredictability in this next cycle.
There will be increased volatility. I think that's what we need to be mindful of.
The United States still is going to outperform both in terms of economic growth and equity markets, yes.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to the start of one of the last trading weeks in 2024. All eyes are very much focused on Wednesday's inflation data as the forward visibility into 2025 gets murkier and murkier. Right now, stocks are basically range-bound, coming after a third straight weekly gain, possibly on track for the best performance for equities in the U.S. going back to the start of the 21st century. Right now, the focus very much on the commodity sector with oil prices rising after turmoil in the Middle East. John Farrow is on a well-deserved break this week. Joining Anne-Marie and myself is a tireless Danny Berger. And Danny, the key question for a lot of people right now is just how high is the bar for these gains to keep going?
Well, with so many tail risks out in front of us, as you mentioned,
mentioned, the market is only concentrating on what it can see. And what it can see is Fed cuts coming this month and the hopium of pro-growth policies from a Trump administration. That latter one, we won't know until sometime in more than a month at the earliest. So for now, we concentrate on the cuts. The only thing that could derail that is CPI coming this Wednesday.
Which we do get on Wednesday, but before that, we have basically the world falling apart. Anne-Marie, over the weekend, we had the Middle East completely overturned with the Syrian government, the Assad regime, being toppled in 11 days. Just how much does this rearrange the politics in one of the central hotspots of hot wars that we've seen over the past couple of years?
Well, the speed of which Assad was toppled, fleeing off to Moscow, looking for some sort of place to seek refuge, was absolutely stunning. The key question inside Syria is who is actually going to govern. This has multiple enclaves and different spheres of influence around the country. The bigger question for the region is what does this mean for Russia and Iran that have strategic influence in the country and use it for their strategic development, whether that's having be able to have ships and access in the Middle East, or whether or not that's able to use transports from Iran through Syria to some Iranian proxies. That is the big question, and who is going to be able to basically fill this vacuum? The United States says they do not want to get involved, but over the weekend you did see them hit ISIS targets.
And it just emphasizes how regime shifts happen in clusters. We see this throughout the world, maybe not to the extremities that we're seeing in Syria, but turmoil in France, turmoil in Romania over the weekend, turmoil in South Korea. At what point does it stop being, hey, this just reemphasizes how great U.S. assets are, to wow, the entire world order is being upset, and America is part of that world order.
And that's actually a point that people have been making, that basically incumbents have been overturned time and time again over the past couple of years around the world. And it comes on the heels of inflation, on the pandemic, on a real widening in the gap between wealthy and poor, which is a reason why Wednesday, when we get CPI data, it is going to be so important. It'd also be important to understand what kind of fiscal dominance there is in the United States with a series of bond auctions. At the same time, you are seeing this morning gold prices surging on the heels of potentially central bank buying from China and the stimulus package over there. Coming up this hour, Jeff Yu of BNY following the S&P 500's 57th record of the year. Terry Haynes of Pangea Policy on the fall of Syria's president, and Neil Richardson of ADP, as Trump says he has no plans to replace Fed Chair Jay Powell. We begin this with stocks at all-time highs, just coming off that this morning following their third straight winning week. Jeff Yu of BNY is cautious, writing the rally up in risk assets in the hope that U.S. growth continues regardless of new U.S. administration shifts in fiscal and trade ahead seems too sanguine. Current volatility in FX markets is a warning sign for the relative calm in fixed income and equities. Jeff joins us now. Jeff, are you going to be one of the lone voices pushing back against the momentum that everyone else thinks can just keep going into perpetuity?
Lisa, well, I'm not sure if it's a lone voice, to be frank, but just looking at valuations, we're talking about valuations for all US assets right now, not just equities, but also in FX, and you can do that using volatility. As we mentioned, that's where we see absolutely the need to be cautious. And the reason is we want to look at fixed income right now. Curve steepening, that's what we're looking for, given the fiscal side and other aspects of the US economy on the inflation side. And we remember what that did to equity markets in 2022. So risk, certainly more risk needs to be priced in.
Jeff, a lot of people are talking about how markets seem to have priced in all the good news, but not the bad news from potential Trump policies. And what we heard from Donald Trump in his first interview over the weekend on NBC since getting elected president was that he wanted to keep a certain status quo, at least with Jay Powell of the Federal Reserve, but was doubling down on the idea of tariffs. What did you make of that, and where do you think the risk is mispriced?
So I think he's trying to be as balanced as possible, but where do I think risk is mispriced? Again, I go back to the Treasury curve. One thing that wasn't talked about by either side during the campaign, it basically is the US's fiscal situation. We've had so much inbound incoming from France, the sustainability of that, but if you look at the OECD's forecasts, which country will have an even worse fiscal trajectory up ahead than France and developed nations? It's actually the US, right? So I get it, it's the world's reserve asset in terms of US Treasuries, but will foreign buyers continue to play ball? They will probably need to deal with tariffs at some point. On the other hand, they're expected to continue to fund the US deficit. I think that's where, and looking at our data, it's not that they're selling right now, but I think enthusiasm may not be as strong as in the past, and that's what we're wary about.
Jeff, the weird thing about that, though, is that conversation was had in both the run-up to the election and the immediate aftermath of Donald Trump's election, of his winning of the election. And you saw that rise in Treasury yields, but it reversed itself, and we're basically flat with where we were at the election. Why did we lose that focus? It had been a part of the conversation.
So the view is Tina, right? So there is no alternative. But now let's take a step back. Is there an alternative right now? A fiscal alternative? I'm not saying the dollar's going to be displaced. I don't think that will happen. But in terms of supply, let's look at market dynamics. If Germany gets rid of the debt brake, look at China's comments today. Both these countries, they are going to push on the fiscal lever, which is something what the market has been looking for. So if there's going to be fiscally driven reflation in Germany and China, then you actually do have an alternative. You want to fund that healthy reflation, that healthy growth that you could see amongst the exporting nations. So I think, that's where the US perhaps should not sit on its laurels. People will continue to buy US treasuries, but if there's reflation elsewhere, then deficits will come down automatically almost. So there's just less dollars available from international investors to fund US treasury assets as well. So again, look at the curve and let's see where the dynamics are going to be.
Even so, people have pointed to the two countries you're talking about, especially in Germany, especially in France, as having political upheaval, and political upheaval throughout the entirety of the world, just reinforcing U.S. exceptionalism. Maybe this gets back to Tina. Is what you're talking about enough to undo the narrative of U.S. exceptionalism?
Well, certainly the case in talking to EU clients right now. If you're relying on EU maybe to push things from within, that will take time. But the Draghi report, has laid out the broader timeline for something to happen. But also, if the EU recognizes that on the external side, there will be more challenges up ahead, that may accelerate change as well. So this is perhaps taking a 1 year, 2 year view. But if there is going to be a path towards change, and crucially going back to the US, looking at where valuations are in the dollar, in US equity markets, and also in treasury markets relative to the deficit, I think people will begin to actively look for an alternative rather than just say, if it ain't broke, don't fix it. I'm going to stay with US exceptionalism. I still believe in that story, to be clear, but I think people will want the right level of valuations for that as well.
Do you still think we're going to see parity at some point between euro-dollar?
Absolutely. So I'm going to absolutely stick to that view. We will go through parity, I think, at some point in the next 3 months or so. Right now, again, looking at our data, euro-dollar is quite short. Our clients are overhedged in European assets. I think that's why you saw a bit of a relief rally last week as well. All the quote-unquote bad news is in. But once we go through parity, that's where I think we need to revisit US valuations. It's not about the euro being too cheap. It's about the dollar being too expensive.
Jeff, let's also talk about China. You mentioned it. And today we have this change of stance in monetary policy, moderately loose from prudent, first time in 14 years. How much is this driven by the incoming Trump administration and potentially the tariffs that they're going to place on Beijing?
I think that's featured into overall policy making. But let's take a step back here. Looking at China's export strategy, I look at export prices, not exactly rapidly expanding, right now. So if you look at overall prices, price expectations, that's something that the PBOC needs to lift. So even without a change in the US administration or US trade policy, and to be frank, there hasn't been much change in any case, or won't be much change from Beijing's point of view, this is necessary from a domestic perspective. So the target audience perhaps is less DC, it's more the domestic audience, and that's much needed, especially as we head into next year, into the MPC session. So this is where I would focus on Chinese equities. And also I would add, last week, when Chinese 10-year bond yields went through 2%, I think that may have triggered some rethinking within Beijing as well. We need to lift expectations right now.
I'm looking at Alibaba shares right now, and they're up about 7%. To your point, very much domestically focused. Jeff, you also see oil prices higher, yes, because of turmoil in the Middle East, but partly because there is this feeling that renewed demand from China could boost prices there. Also an increase in gold prices. At what point are you pushing back and saying, most of all, this is going to be domestic and it's not going to trickle out into necessarily commodity markets and nearby currencies, given that this really is insular?
So what was unique about today's statement was it really had a positive message regarding household consumption. So if it is household consumption, household spending, I would say that's good from the US's point of view in terms of reducing deficit if China buys more services. I'm not sure there is a case for really pushing on real estate again or pushing on investment growth again, certainly not compared to, say, 2009, right? So if we compare to previous episodes of mass expansion, because that tends to leave debt issues. So I can just say this this is a non-negative for commodities, but is this really focusing on the Aussie, on the South African rand or oil prices or lithium prices even in general? I would probably temper my enthusiasm on that.
Which is the reason why people are focused very much on the United States yet again to see whether it can continue to grow at a fast pace and whether we see any significant policy shifts from the Donald Trump administration. This week is a significant week following non-farm payrolls on Friday. We have CPI coming on Wednesday. That's the main event. We also get PPI on Thursday and jobless claims. The ECB on Thursday with that decision, which is going to be a really fraught one. We also get auctions all through the week. I won't run through them, but Jeff, from your perspective, how much has the risk shifted to an overestimating inflation and frankly, for people maybe being surprised to the upside and the Fed not being able to do enough? How much has that shifted and away from the jobs picture?
So I think overall, looking at the Fed right now, so I don't think we can rule anything out. It's less about shifting away from inflation. So looking at the downside picture, but at the same time, it doesn't preclude, let's say, a big push, towards easing as well. So no more strong inflation doesn't mean strong disinflation. Whereas if I look at the ECB, there is a much larger risk to the downside. This has been highlighted in the PMI reports where you have manufacturing weakness spilling over into the services side, given the services has been driving inflation within the Eurozone. That's why there is a downside risk. So I still wouldn't rule out 50 basis points by the ECB as a tail risk. We might get 50 basis points. Actually, I think we should get 50 basis points from the Swiss National Bank this week as well. But that will tell you that the major downside risk, clearly is in Europe right now when it comes to prices.
And that would be 125 basis points of cuts this year from them if that were to transpire. Jeff Hugh of BNY, thank you as always. Right now, let's check in on what's going on outside of just the focus on markets. Here is your Bloomberg Brief with Yahaira Hackes. Yahaira.
Hi, Lisa. For the first time in more than 50 years, Israeli ground forces have crossed into Syria. Israel's foreign minister said they struck a chemical weapons and missile storage facility in Syria, calling it a, quote, preventative measure. With Syrian President Bashar al-Assad's government now toppled, Israeli Prime Minister Benjamin Netanyahu says this may help advance a deal to release the hostages held in Gaza. Meanwhile, UBS CEO Sergio Aramati says the incoming U.S. administration's potential move to raise tariffs on trading partners could increase risk in financial markets next year. He spoke to Bloomberg earlier today in Abu Dhabi.
The acceleration of geopolitical events coupled with potential escalations on the macroeconomic front, tariff, protectionism, it's definitely something that has to be watched. On the other end, we still see consumers and the economy quite resilient despite all these challenges.
Aramati also said he's expecting to see continued volatility next year and is advising clients to be well diversified. And big news in baseball, Juan Soto is heading to the New York Mets. The 26-year-old slugger signed a 15-year deal worth $765 million with no deferred money. That's the largest signing in pro sports history, topping the blockbuster 10-year contract Shohei Ohtani signed with the Dodgers last year. The Soto sweepstakes had been in full swing for weeks, with a number of big-name teams in pursuit, including the Boston Red Sox, Los Angeles Dodgers, and Yankees, who he helped bring to the World Series this past season. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. I just want to really emphasize that the Mets did get Juan Soto away from the Yankees, and they probably will do a lot better.
Mr. Wonderful, how did we lose him? I'm so upset this morning.
It was a price tag that was worthy, I suppose.
Yeah, Yankees can buy a lot of other people. Maybe not another Juan Soto, but, some other problems they have.
Or not. Or maybe the Mets will just be a lot better. Up next, Assad's regime falls in Syria.
It's a moment of historic opportunity for the long-suffering people of Syria to build a better future for their proud country. It's also a moment of risk and uncertainty. As we all turn to the question of what comes next.
That is up next in terms of a conversation. You're watching Bloomberg Surveillance.
covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Basically range-bound after a third straight weekly gain with 57 all-time highs on the S&P 500. Right now, not a lot of drama ahead of the CPI print on Wednesday and Friday's ECB rate decision, but crude up 1.4% as turmoil in the Middle East boils over. Under surveillance this morning, Assad's regime falling in Syria.
At long last, the Assad regime has fallen. This regime brutalized and tortured and killed literally hundreds of thousands of innocent Syrians. The fall of the regime is a fundamental act of justice. It's a moment of historic opportunity for the long-suffering people of Syria to build a better future for their proud country. It's also a moment of risk and uncertainty. As we all turn to the question of what comes next.
Here's the latest. U.S. airstrikes hit dozens of Islamic State targets in Syria after rebel groups overthrew Bashar al-Assad's government, ending 50 years of party rule and sending shockwaves through the entire region. Terry Haynes of Pangea Policy writes, Assad's rule wasn't in any way positive for Syria, the region, or geopolitically, but new Syria is a void into which many competing geopolitical interests will pour things. And Assad fell quickly, perhaps too quickly, for the rebels or anyone else to be prepared. Terry joins us now. Terry, you wrote a phenomenal note over the weekend that really highlights the level of uncertainty and what could potentially happen. What do you think the U.S.'s involvement is right now? Because we did hear them say we shouldn't be involved. Trump has said he thinks the U.S. should not be involved, and yet the U.S. has been bombing select sites tied to Islamic State.
And yet we will be involved. Good morning, Lisa, and everybody. And yet we will be involved, and we should be. I think the option is to be involved and help shape the future of the Middle East, and we've been involved in that since after the Second World War, or to recede, in which case the opportunity for a void and pressure on allies, whether they be Israel or Saudi or Jordan, become much greater. So I think the American involvement here is here to stay, and America sees the opportunity, frankly, as does Israel and others, to assert a maximalist pressure. The choice here is whether we're going to have a Middle East, and kind of one of the cruxes of the world in a hot conflict that is more controlled by moderate Arab states and or by Iran and others. And so the United States needs to stay involved.
Terry, when you say exert maximum pressure on who? Is this on Turkey? Is this on Iran?
Yes. In different ways, sure. Turkey is clearly a winner of this already in the sense that it gets to exert more influence in Syria, and we'll see how that push for influence is taken by the victors in this conflict. But you also have a situation where Iran thinks it can benefit, even though clearly its nose has been bloodied here, thinks it can benefit by stoking the void that I talked about. And that's something that the United States and its allies have to push back against also.
President-elect Donald Trump made it very clear over the weekend, saying the United States should have nothing to do with Syria. This is not our fight. Let it play out. Don't get involved. Do you see the same level of involvement during the Biden administration? Right now, what we see being transformed over to the President-elect Trump and his 2.0 administration?
Well, let's put it this way. President-elect Trump has been very clear about his continued support for Israel, his continued friendship and desire to be helpful to the Saudis. Let's remember, Trump has a legacy here in the Abraham Accords as well. So for those three reasons alone, I think what you're going to see is a continued involvement in the region by the new administration.
The period, though, from when Trump was elected now heading into his inauguration, Terry, you point this out in your notes to clients, this idea that it has been dominated with foreign policy for the president-elect, and it might only get worse. What does that mean for Trump and this market's hope of getting some of those domestic policies through, of accomplishing that, when Trump's agenda this far has been dominated with geopolitics?
Well, I think the Trump's agenda has been dominated by geopolitics for a very good reason. I mean, there's been an awful lot of it, right? And it continues without let up. So it's to his credit that he's focusing on it so much and so well, particularly when the outgoing administration seems to be a little back on its heels by comparison. But what I think is going to happen here is that things will proceed on two tracks. The idea that you have tax cuts and that you deal with the tariffing and all the rest, I think proceeds largely on one track. The pure foreign policy proceeds on another track. And frankly, the tariffing becomes kind of a bridge between the two, since tariffing has now long been a tool of geopolitics as much as anything else.
Well, some of those concerns of what might come to the U.S., as you say, Terry, it might be forgiven because of what's happening globally, that U.S. exceptionalism can kind of reign on because of the discontent around the world and the governments being overthrown. At what point, if at any, does that stop? That doesn't necessarily act as a distraction, but it all involves America too, and investors' likelihood of continuing to buy up American assets.
Sure, it's a real hinge right now, and the big question, I think, is the extent and how and whether markets tire of wanting to continue to support the United States when you've got serious problems with fiscal spend, with debt and deficit. I think what the president's going to want to do, and this is part of the reason why he appointed Scott Bessent to be Treasury Secretary designate, is he's going to want to make a move in the markets towards wanting to curb debt and deficit at some time, in some way. That may be more style than substance, but at the same time, he's going to want to make a move in that direction to reassure markets at the same time that he's pursuing his domestic tax policies.
Terry, is that basically the takeaway from the interview that he did yesterday with ABC?
Is which? That
he wants to maintain the status quo.
In where, Lisa?
In the markets, basically with respect to keeping Fed Chair Powell and not trying to really rattle anyone with respect to going after political enemies, but also not really giving any sense that he won't.
Oh yeah, absolutely. Trying to rattle, the reason why I've always thought that the Powell thing was a non-starter, and yesterday I think I was proven right, is that you can't rattle the Senate, who you need to implement policies, and you can't rattle the markets, who you need for confidence domestically and abroad. So the whole Powell gambit's a loser from that broader perspective.
Thank you so much. Terry Haynes of Pangea Policy. And it was an NBC interview that Donald Trump was speaking on, and it was the first. And honestly, I think that was probably my takeaway, was that he wasn't really interested, Emery, in rattling anything or shaking anything up in a material way.
And we have to remember, he's still getting his cabinet picks together. We're still waiting on a number of individuals that he still has to announce. On top of that, can some of these individuals, when we're talking about Syria, does Tulsi Gabbard still have this ability to get confirmed after what we're hearing what's going on in Syria? Someone who went down and met with Bashar al-Assad when she was in Congress. So it's going to be a very interesting week in terms of that on Capitol Hill.
Yeah, especially at a time where you've got some big personalities that are starting to already clash within the cabinet. Coming up, more on what's happening with China. Bloomberg's Enda Curran, as China signals looser monetary policy and a real shift given the fact they want to support domestic consumption. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
There are 3 more trading weeks left in 2024, and what we can see is just that momentum continuing even on days like today, where basically it's soggy, range-bound, not doing much, following 3 straight weeks of gains, 57 record highs. Today, we can't really find direction, but what is notable is that last week was driven by the tech names. This week seems to, at least if you could take anything from the pre-market trading, is being driven by small caps. In the bond space, really the key shift here is going to be how much to CPI shake some of the complacency in markets that the Fed can continue to cut rates and even lob a few rate cuts into the mix next year. Danny, we have across the board 2s, 10s, and 30s kind of going nowhere. Again, just around the edges given some of the volatility that we've seen, but given the fact that non-farm payrolls was a non-surprise, it really does up the ante on what we're missing in terms of stickiness in CPI.
And the Fed communique, what we've heard from different Fed officials has been inflation's coming in and that's why we can cut. They've kind of shifted away from saying the labor market is weak. The issue is that they're in a blackout period right now when we're going to be getting the CPI data, PPI, and import prices. What happens if it's hot? Is it another round of kind of massaging the message through their various favorite media outlets?
Yeah, I was going to say, just look for some articles maybe in the Wall Street Journal and maybe we'll get a sense. But it comes at a time where we hear about a policy mix that's going to be front-loaded with tariffs and back-loaded with some of the potential stimulative aspects. And I do wonder, we do have auctions this week. I just want to point out, Anne-Marie, I know that you're focused on them just as much as I am. $58 billion of 3-year notes tomorrow, $39 billion of 10-year notes, and what was that, $22 billion of 30-year notes on Thursday. How much is Trump aware of this and really focused on making sure that yields are contained?
I think he's very aware, but in that interview with NBC, he once again reiterated that there will not be cuts when it comes to Social Security, when it comes to Medicare. When you look at the spending of the U.S. budget, that's like the biggest slice of the pie. On top of that, what else to your bond auctions is the U.S. spending a ton of money on, more than ever, bigger than the defense budget right now, paying off our debt, net interest payments. So he's very aware of this, and so are some of the fiscal policy hawks his administration.
Which maybe is the reason why he's not so unhappy with Jay Powell, given the fact that he has that dovish proclivity. Meanwhile, in the commodity space, you can see oil prices ticking higher, and this comes even with some of the glut that we're seeing from the likes of Saudi Arabia, OPEC plus countries, and this comes maybe because of the turmoil that we're seeing with the fall of Bashar al-Assad's regime. You can see Brent crude up about 1.25%, crude traded on the NYMEX 1.4%. A real question here about how much this is geopolitical and how much this has to do with China. Under surveillance this morning, U.S. airstrikes hitting dozens of Islamic State targets in central Syria yesterday. President Biden warning that Bashar al-Assad's fall from power could open the door to a resurgence from Islamic extremism at a time where there seems to be a void in U.S. leadership.
Right, and there's going to be a void in leadership when it comes to Syria, and that is why there is concern about this reconstitution of ISIS. We heard from General Kurilla when CENTCOM put out a statement last night, and they said there should be no doubt we will not allow ISIS to reconstitute and take advantage of the current situation in Syria. All organizations in Syria should know that we will hold them accountable if they partner with or support ISIS in any way. When Terry Haynes says the U.S. says they're not getting involved, but then again, they are involved, it comes down to this. Whether it's Biden, whether it's Trump, neither of these individuals want to see a reconstitution of ISIS.
Well, that's the thing. A lot have pointed to Donald Trump's post over the weekend saying, this is not our fight. Do not get involved in Syria. But I would remind everyone that in late 2018, he said that the U.S. would be leaving Syria. What evolved after that was Congress essentially coming out over to him and saying, we can't leave Syria. There still is ISIS in Syria. The U.S. has to be there. And 11 weeks later, Trump reversed course and said, we are going to be there. Maybe eventually we'll pull back and only have 400 troops there. There are still, according to the Department of Defense, 900 troops there. So even what Trump wanted to do and what he said he wanted to do didn't happen to the full extent. So it's just a bit of caution to look at what Trump says and to think, will this really happen? Will this not be the America's fight?
And this isn't just Syria. This was the strategic playing ground of Iran and of Russia. So a real question here about how that evolves. We'll have more on that in just a second. Meanwhile, thousands of Volkswagen employees are preparing to walk off the job today if management and labor leaders can't break a stalemate over cuts at the car maker's namesake brand. It will be the second time workers have gone on strike this month. The union says it's ready to escalate protests if the two sides fail to make progress in this long chain of pressuring European auto manufacturers, Danny.
It's a rock and a hard place for VW. I mean, they were caught by surprise of Chinese EV. Demand is weak, but at the same time, this is nearly 100,000 workers. I was looking at it. Germany has 300,000 workers. That means a third of workers in Germany are willing to go on strike. And if it's a stubborn VW that says, look, we have to make these cuts in order to survive, will it be that stubbornness that eventually undoes them? There is a real willingness for these workers to walk out.
Well, this does feel like a little bit in the end of a negotiation where you escalate to de-escalate, because the lead negotiator for workers is talking about the fact that they are trying to get something done before Christmas this year. Olaf Scholz giving an interview over the weekend talking about that VW should not shut down factories. So it's not just the negotiators, it's also going to be the political pressure on VW to make sure that they shore up these jobs. Olaf Scholz says closing locations, quote, would not be the right way because of poor management decisions that added to the difficult situation. I think VW and all of these automaker executives would say, well, actually, it was the policymakers that set the tone of where we should be going and told us to produce cars that right now there's just no demand for.
Well, that's what I was going to say. I mean, in this war of finger pointing, how much are we looking at a VW that has the capacity to do more, to give more, or some of the auto manufacturers in Germany that are flat on their back and can't really afford to compete with the policy mix that they're facing off with?
Well, it's the policy mix coming down the pipe from the top when it comes to the German government. And then on top of that, it's the fact that they are dealing with the onslaught of cheaper cars that are coming in from China. So a lot of this has to do with policy shifts, even less so more than what is going on the factory floors.
Talking of China, China's top leader is planning to loosen monetary policy and expand fiscal spending next year. The move by the Politburo marking its first major shift in stance since 2011 is coming as China braces for a second trade war with President-elect Trump, and also facing off, Danny, with some pretty negative data showing deflation in goods and more disinflation in the consumer price sector.
I thought it was really interesting, that conversation we had with Jeff Yu moments ago. How much of this is for the domestic audience versus the international audience? Because when this first started, there'd been a lot of commentary coming out of this meeting saying that this is China saying we are prepared for a Donald Trump. Before, it had been incremental policy. This time it looks to be a package, something this market had been waiting for. Is this China saying, we are prepared for you, Donald Trump, and we have the firepower necessary to combat any tariffs you might put onto us?
Let's get someone who can answer that question. Bloomberg's Enda Curran stops by, at least virtually. Enda, thank you so much for being with us. What's your take on exactly what the motivation is behind this policy shift?
Well, if you take it at face value, this is the biggest policy shift in China in years. Like you mentioned, there's tweaks of language throughout the statement that came out of the Politburo. This is the top policy-making body in Beijing. They're talking about they now want moderately loose monetary policy. That's the shift, putting monetary policy back to where it was during the global financial crisis. There's language in there around wanting to spend more. There's language in there around extraordinary counter-cyclical measures. That's jargon for, willing to pull whatever levers they can to get things going. And there's also talk in there about pushing through reforms and getting consumers to spend more, which of course would be music to the US Treasury's ears. So on paper, it signals that China is readying for the potential fallout from the Trump trade war. They're signaling that they do have tools, but as you mentioned at the start as well, let's not forget they're coming from a pretty low base. PPI in deflation, consumer prices at zero. There are plenty of reasons why China needs to stimulate its own economy without a trade war anyway.
Do you have a sense of what they're looking at doing when it comes to fiscal, right? Because we heard about the monetary policy levers and taking a more accommodative stance. The fiscal remains a real question mark, given that Xi Jinping's regime has really been averse to putting money directly in the pockets of households.
Yeah, and this is where it gets into kind of the devil in the detail. As I say, face value, headline, takeaway here is it's a significant change of tone and language from the authorities in Beijing. This is what the world has been waiting for the past couple of years. But we don't have the detail. There is an important meeting later this month called the Economic Works Conference when the officials will gather and note out the economic policy detail. But we won't get the figure. Local government level is where the fiscal stress is. So a lot of analysts will say China has room to spend money. It's a question of do they have the appetite and political will to do so.
That's the thing, Enda. There have been lots of false starts in China before with hopes of stimulus. What are the signs to look for to see whether this is the case, whether this is another false start, or whether this leads to actual concrete action with the details that you're talking about?
Well, I think we know that the starting point for China is the economy has been struggling now, say in the post-pandemic period. The real estate sector has been in a slump. Consumers have been hitting the potential that they could be. The export market is roaring now, but manufacturing has been hit and miss over the past few years in general due to the overcapacity story. So there's a case, first and foremost, for China to deliver support for its own economy on its own terms, and that's why there's an expectation there is something coming down the pipe. They have been slowly ratcheting that up. But then, of course, you step back and look at the global stage. They now know the outcome of the US election. We know President Trump has a very hawkish trade policy. He's already threatened tariffs on China since winning that election. So they know they have to brace for what's coming down the pipes, and they have to get their house in order. It takes time to get their bureaucratic system in order and to get the agreement in place to pull the levers that they need to if and when they have to. But it's also a signal, of course, to the rest of the world that China has the fiscal spending power needed to revive the economy. And I think that's probably one of the key takeaways. They're bracing for the trade war, and they're ready for it.
Well, they know it's going to be Donald Trump sending something down the pipe, Enda, but we don't know exactly what the details of it will be yet, whether it's blanket tariffs, whether it's targeted. How much is China likely to hold back until we get the details, until we get specific policy proposals from Donald Trump?
Absolutely. Look, there's a kind of a view out there among the analyst community that China will play nicely to begin with. Hear out President Trump, see what he has to say. There's a view that maybe it all kicks off with returning to the initial trade agreement, the so-called Phase 1 agreement, before they get into any rounds of new or punitive tariffs. So China is flying blind like everybody else to some extent. But at the same time, though, there are two things going on. This is China saying we can support our economy if necessary. And China has also been making clear that they can respond and retaliate where necessary. We saw the response to the latest semiconductor restrictions last week with the export controls on those critical minerals to the US, for example. There are other areas where China can make it awkward for US companies doing business inside China, and awkward for, we'll say, the agricultural sector in particular as China sources new markets. So I think China is making it clear it's getting its house in order for whatever does come down the road. If President Trump comes to the table and does a deal, they'll do a deal. But if it becomes quite a tit-for-tat trade war, high tariffs and all the rest of it, they're going to cushion their economy. And, of course, they have got some tools or some levers to pull themselves in response to what the U.S. does.
Well, speaking of those levers, Enda, we're getting a headline that China is probing NVIDIA on suspicion of anti-monopoly law breaches. How many more of these are we going to see? Are we already in a tit-for-tat between American companies and Chinese companies?
Well, China has made it clear before that they will respond to any US-led trade war. They did so the last time around, and in particular, they can make life difficult for US companies doing business in China, and there are different ways they can do that, whether it's inspections, whether it's regulatory oversight, permits, the likes. There are levers China can pull, and this is something that's been a consistent theme over the past few years. And I think, again, if we do go down the road of a trade war, so to speak, between China and the US, it won't just be the US that has trade levers to pull. China will be responding.
And to Karin of Bloomberg, thank you so much for that. And as Anne-Marie just mentioned, we did get this headline that China is probing NVIDIA on suspicions of anti-monopoly law breaches. It's according to China's Central Television. And we're seeing NVIDIA shares down 2.3%, waiting for more details to understand exactly what goes into this. But AMH, it's a real question here of how much China wants to crack down on U.S. companies while maintaining access to some of the products that have generated a lot of the AI fervor.
Exactly. NVIDIA sells these chips into China. And what this headline may be is that the CCP is just trying to hit back on U.S. companies because of things like export controls that happened under the Biden administration, tariffs that maintained in place from Trump to Biden, and then the expectation that maybe there's going to be a whole lot more coming down the pipe with President Trump in the White House.
Well, the thing is we've talked about this. What does President Trump care about as a barometer? It is the equity market. If you want to upset Trump, you go after literally the biggest company in the S&P 500, the one company that has the potential to move the overall market. I think this is a space to keep watching.
Well, we will bring you more details as we get them. Right now, let's get an update on stories elsewhere. Here is your Bloomberg Brief with Yahaira Hackes. Yahaira.
Hi, Lisa. South Korea's Justice Ministry has banned President Yoon Suk-yeol from traveling overseas. The ban coming as multiple investigations are underway following the embattled leader's brief declaration of martial law. He survived an impeachment vote over the weekend. The Kospi benchmark stock index closed down 2.8% today, and since the martial law declaration last Tuesday, it has fallen more than 5.5%. Meanwhile, the search continues for the suspected gunman in the killing of health insurance executive Brian Thompson. Here's the latest. The New York Police Department released new images on Saturday of the suspect in a taxi that's believed to have taken him to a bus station. From there, police believe he boarded a long-distance bus out of New York City. The photos were released hours after a gray backpack was found in Central Park, matching the description of one carried by the gunman. In it, a jacket and Monopoly money were found, according to people familiar. And a World Health Organization rapid response team is headed to the Democratic Republic of Congo after over 400 cases of a mysterious flu-like illness were reported. They're calling it Disease X. The outbreak is centered in a remote region in the southwest Congo and began in late October. So far, 31 deaths have been recorded. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Coming up next, Trump pledging to keep Powell.
Will you try to replace Jerome Powell?
No, I don't think so. I don't see it. But I think if I told him to, he would. But if I asked him to, he probably wouldn't.
Basically, you know, if I asked him, but I won't. If I told him, definitely. That's all coming up next. This is Bloomberg Surveillance.
about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Heading into the third to last week, trading week, full trading week, sort of 2024. Can you tell that I'm counting down? We all are counting down, and the question is just how much does that market can melt up. Today, it's range-bound. S&P futures lower by about 0.1%. A real question on the bond market ahead of CPI. Under surveillance this morning, Trump pledging to keep Powell.
Will you try to replace Jerome Powell?
No, I don't think so. I don't see it, but I think if I told him to, he would. But if I asked him to, he probably wouldn't. But if I told him to, he would.
You don't have plans to do that right now?
No, I don't.
Here's the latest. President-elect Donald Trump telling NBC's Meet the Press with Christian Welker, saying that he has no plans to replace Fed Chair Jay Powell when he returns to the White House. The comments come just a few months after Trump told us here at Bloomberg that as president, he should have a say in monetary policy and the setting of interest rates. Neela Richardson of ADP joining us now. Obviously, he wants rates to be lower. He is a developer after all, and that will juice housing markets and a whole host of the economy. A key question of how tied the hands are of the Fed to the fact that inflation might be the surprise card here heading into the end of 2024.
Right, so when you look at last week's jobs report, you get a bit of a riddle for 2025. You get very strong job growth, uptick in the unemployment rate, and importantly for the Fed, really robust wage growth. Where does that lead to? Sticky inflation. So the riddle is an H for hiring or an H for hiking. We don't know in 2025, but the wage growth is putting pressure on inflation, and that's something the Fed has to keep in the rearview mirror as they're trying to support the labor market.
Pause. You've said recently that it seems like this jobs market is on a knife's edge. It could go one way or another. Are you saying that we're at that tipping point where we could see whether the solidity of the labor market is actually contributing to an increasing likelihood of stickiness and even a rate hike?
Yeah, we're in the stasis period, this really quiet period in the labor market where there's very low layoffs and now pretty, average hiring. If you take the last 3 months of the BLS data, you get something a little bit less than 140,000 jobs created every month on average. So that's solid. But I don't think we stay in this equilibrium. I think there is a tipping point that is coming, and I'm not quite sure whether it's a tipping point lower or a tipping point higher, so I'm watching wages. And what wage growth suggests, both in the BLS data and in the ADP payroll data, it suggests that wages are still robust, they're still growing. That suggests there's still a bit of tightness in the labor market, and I think that's tied to longer-term trends, not something that the Fed can fix right away.
Is there a possibility that when that equilibrium shifts, if it does shift towards sticky inflation, that it's not just sticky, but wage growth also translates into reacceleration of inflation?
And that's the problem for the Fed. It depends on what they do. Right now, it seems like they're on track for a cut in December. That could be followed by a pause early next year. We're all hoping that it's not a hike because that would imply an acceleration of inflation much higher than the Fed's projections right now. But given how robust wage growth is, remember before the pandemic, that 10 years of expansion, wage growth was between 2 and 3%. We're now at 4%. So there's no consistency of a 4% average hourly wage growth with 2% target inflation.
Is there a risk, though, that if the Fed is cutting in December and they continue with some cuts, at least in the first half of 2025, that they allow that reacceleration to happen, that they create the environment where the animal spirits can continue, hiring can continue with the hopium of what a Donald Trump presidency means, and that's what creates it?
Well, decades of Fed policy teach us one thing, that monetary policy is risky business. I mean, usually that's how the economy falls into a recession. The Fed hikes rates to contain inflation, and that tips the economy into recession. That did not happen this time. Interest rates went higher and the Fed and the economy kept growing. So we really don't know, in the context of the current economic environment, exactly what's going to happen to the economy. When you look at the consumer, when you look at the labor market, it's still very solid and resilient. So that's, I guess, the hope for the Fed. They still have some wiggle room.
Following the jobs number, we saw these bets for December CUP go up. Was that too premature, given the fact that we don't have CPI yet?
Yeah, I think the Fed is waiting for CPI. We're seeing a 3.3% core CPI right now. We're seeing a month over month that we're not going down to like a 0.2 or a 0.1% monthly range. That is a nervous period for the Fed, because if we keep going up month after month at 0.3%, that is not going to drag us back down to that 2%. So it's not just wages. Here now, it's shelter costs and housing that's driving up inflation.
Well, we heard from Mickey Bowman on Friday following that report, and she says we have so much growth right now, it's hard to think that the level of the interest rates is restrictive at this point. Are we restrictive?
That's a question for the FOMC, and we're starting to see that there's a lot more disagreement on that FOMC than there was previously. Look, you know, when inflation was unspeakably high, it was easy to get everyone on agreement, and it was easy to see the path. As we get closer and closer to that 2% target, I think you're going to see the FOMC opinions start to diverge on where is that neutral rate and how to get there, and that's what you're going to see in these public comments now.
Neela Richardson of ADP, thank you so much, and we'll see you for a full hour tomorrow. I will just note this. Morgan Stanley put this out that I thought was fascinating. I'd love your thoughts on this, Danny. That aggregate payroll incomes provide strong support for consumption. They are rising at 5.5% annual rate versus the third quarter, stronger than the 4.5% pace in third quarter, or 4.9%. Basically, we're looking at a reacceleration of how much people are earning and the hours that they're actually working.
And the big risk has been a restoking of demand. And that also plays into 2025 with the kind of policy that we might get. Are we going to get policy that includes tax cuts, things that, again, allow people to have more of a disposable income and spend more? If you're already seeing some of that happen in the pay roll numbers, if you're already seeing that in some of the wage growth, what does 2025 look like then?
One thing we did hear from Trump over the weekend with his NBC News sit-down was that he does want to focus on, in the first 100 days, immigration first. He said, then we're going to come to taxes. So kind of what we heard out of the Senate as well. It's going to be immigration and then taxes. The big question is, when do tariffs come?
And what does immigration do to the workforce at a time where there potentially is upward pressure on inflation? Now, coming up next, Chris Harvey of Wells Fargo, Henrietta Trey's of Veda Partners, Norman Rule of CSIS, and Kevin Rosenbaum of Cambridge Associates. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Profitability of U.S. companies is unlike anything else that's available in the global equity market.
I'm not necessarily saying we're sitting at like 2000 dot-com bubble type overvaluation, but we look a little bit over our skis.
There will be a lot of unpredictability in this next cycle.
There will be increased volatility. I think that's what we need to be mindful of.
The United States still is going to outperform both in terms of economic growth and equity markets, yes.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back. Just 3 more weeks of the year. And what we see right now is just a sense of how high you can raise your forecast for next year, because clearly it wasn't ever high enough heading into 2024. A real question here after 3 straight weeks of gains, and what you can see in markets right now is this sense that maybe we're just range-bound waiting for some sort of catalyst to see whether we can breathe a sigh of relief or not. A question before we get to sort of the angst of the morning is just how many, Danny, how many potential upgrades are we going to see heading into the close of 2024?
It's really interesting you mentioned where we were at this point last week, because I was looking back on it. We were somewhere around 4,300 in terms of the year-end average of analyst expectations. Obviously, we are way above that at this point. But at the time, that had implied that we would move up less than 1%. I wonder how much of this is also just overcorrection to say, hey, we missed that rally in 2024, and we're not going to do it again.
Meanwhile, what you could see in oil prices is just a creeping sense of anxiety that maybe something could disrupt this happy talk and the nirvana of the soft landing that everyone seems to be banking on. And that is the idea of geopolitical risk, namely that Syria saw an upheaval after 50 years of rule from the Bashar Assad regime, that suddenly there is a vacuum of power in one of the proxy war grounds for Iran, for Russia, for others.
Absolutely. I think the bigger questions for the region and for the world and for investors that continue to say, you know, we're bullish no matter what, is what happens in terms of Iran and Russia in Syria. For Iran and Russia, this is strategically imperative to make sure that they have a stronghold in that country, whether or not that's access to the Mediterranean Sea or it's for logistic purposes for Iran in supplying their proxies. This morning, Bank of America put out their credit investor survey. Their biggest concern for 2025, maybe some of the tail risk to all this bullishness, is geopolitics. 30% say that's their #1 concern next year.
And this is the reason why you're seeing a lot of attention on it. Not a lot of movement. People are sort of keeping an eye on at what point, and you asked this earlier, Dan, Danny. At what point does this solidify the narrative of Tina? There is no alternative to the United States because the rest of the world is falling into an increasing question around even leadership, let alone economic resilience.
I mean, that's why you keep seeing this demand for U.S. assets, because yes, what else is there? What else is there when it's not just the Middle East that's a hotbed of conflict right now, when it is France, when it is Germany, when it is South Korea, when it's Romania as well over the weekend. But at what point do you say this isn't a complete upheaval of global order, that the neoliberalism that allowed the rallies of the past decades is coming to an end, and we need to rethink developed market assets?
It all sounds great. It all sounds really good. Jeff, you would come out and say, watch the options. Maybe I would say that, but I would just channel his thoughts on this question of what's coming up this week. Because we do get CPI on Wednesday, the key benchmark of the week at a time where the focus is not really on how weak is the labor market, resilience there as we saw on Friday, but the real question is how sticky is inflation? Does it push the Fed to potentially stop cutting rates, even hike rates next year at a time when there's a real question about whether you can have your cake and eat it too in the United States of America? Coming up, Chris Harvey of Wells Fargo as stocks come off their third straight winning week. Henrietta Trey's of Veda Partners as President-elect Trump doubles down on tariffs from day one. And Kevin Rosenbaum of Cambridge Associates on market leadership heading into the new year. We begin with this hour with stocks range-bound. November payrolls boosting bets that the Fed will indeed cut rates next week. The S&P 500 notching its 57th record close this year. Chris Harvey of Wells Fargo looking ahead to next year saying this: stocks go higher, but so does risk. On balance, we expect the Trump administration to usher in a macro environment that is increasingly favorable for stocks at a time when the Fed will be slowly reducing rates. In short, a backdrop where equities continue to rally. Our year-end 2025 S&P price target, 7007. Bond, James Bond, joining us now, otherwise known as Chris. Chris, cute, very cute.
Thanks.
So you start talking about how there are these worries, and then you go on to give this pretty bold projection. Why do you sort of cast aside your worries?
We don't cast aside our worries. There is a wall of worry. It's tariffs, it's inflation, growth isn't strong enough, geopolitical, so on and so forth. We just think you're going to scale that wall of worry. And what we're talking about is risk is going higher, and that's true. But when risk goes higher, equity markets also go higher. So I think one of the things that we've said, and the title of our outlook is Good Year, Bad Vintage. Right, we're going to look back. Thank you.
Discussion this morning. Carry on.
Equities will go up, but when we look back at 25 from the perch at 26 or 27, we'll realize that's when people went too far out on the risk curve. That's when they went too far down the capital structure. That's when they put too much leverage on. And so we think that this is a year where risk does take off, so do equities, but by the end of the year, you really got to think about repositioning that portfolio. So equities up, yes, but risk too.
So on your yacht with James Bond, with your surging stock market, you also have a bad vintage of wine that's preparing for something down the pike. Before we get into leadership and some of the internals of that, a real question of how much check the bond market is on some of this euphoria at a time where we were just talking to Neil Richardson about the potential for stickier inflation driven by this robust labor market.
So what we were worried about and what the market is worried about is inflation. And what we were looking at was break-evens. Break-evens were between 2.25% to 2.5%. That's at the high end of the 20-year range, right? So you're already pricing in a pretty aggressive inflation expectation. We were already, I thought, toward the high end of the range at 450. So we can get to 475. I just don't think you can get there to 5% really on fundamentals. Because if you look at real rates, you look at break-evens, they don't support a 5% range. We get there, yeah. Is that a problem for equities? No doubt. But it's hard to see that from a fundamental point of view, especially when the Fed is still in an easing cycle.
I'm interested in the timeline for all of this because for you, you say, okay, 2026 is that year where some of, you have to uncork the bottle of wine, if I can really paint that metaphor. Andrew Sheets of Morgan Stanley, to use another metaphor, called this a dessert-first market, that we have all the easy stuff. Yeah. But for his timeline, that ends second half of 2025. Yeah. What for you is the thing that says this can continue on for another year?
Oh, gosh. Well, what can continue on for another year? Fed continues to ease. We look at something like 04 to 06, where they lowered 25 basis points at a clip, and they continue to do it, not at every meeting, but continuing into 26. We get an M&A cycle that begins to really heat up. Fundamentals still stay strong, and things that were overblown with regard to the tariffs really are just overblown. And so you have a situation where the economy is good, inflation is coming down, inflation is moderate, The Fed is easing, and we have pretty strong M&A market. I think you can see equities continue to run in that environment. And maybe I'm wrong that systemic risk or risk really takes another 18 months to build.
I'm curious, you didn't say in there that one of the things that helps us along is technology and the promise of AI. We've seen some bears throw in the towel. Robini was on this show sounding remarkably bullish in contrast for how Noriel usually sounds. David Rosenberg has also kind of cast aside his concerns, saying that it's all about technology and valuations. We need to look at them differently now because of what AI is going to bring in the next decade. How much truth is there to that for you?
Listen, AI is a generational technology. We're just building the foundation at this point in time. We're beginning to see some of the software companies are beginning to see some commercialization, but we're just in the infancy. Is that going to reduce productivity? Yes, increase productivity. The answer is yes. Is this any different than the early 2000s? I think yes, because valuations are different, but that was a generational technology that took years and decades to really play out. And I think this is true for AI as well.
What gives you confidence that the tariff narrative is overblown? Yesterday we heard from President-elect Trump, who said he's a big believer, once again, of tariffs. He says he's going to enact them. He says he wants to make sure there's fair, fast, level